following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. It's September 18th, 2024, Fed Day today. Joining me live from Long Island, New York, the incomparable Tom Schneider, CMT. Tom, good morning.
Well, good morning, Jim. How you doing?
Pretty good. Pretty good. I pumped up this morning. I had a little bit of auto trouble this morning. I'll be honest with you.
What happened?
Yeah, I went out in the garage and the back tire in my car was flat as a pancake.
Oh.
I had to push it out of the garage, get that little mini jack that they have in the trunk, change the tire, put that little donut on there, and then throw the tire in the trunk and basically told Mrs. Kaggs, I got to work today. You got to take this tire to get fixed.
Well, I mean, you knew how to change the tire, put the spare on. That's good.
Oh, yeah. Grandpa Kaggs taught us that, like, before we could walk.
Yeah, I don't think that's a skill a lot of people have anymore. I could be making it up, but my experience is not everybody has that skill.
Well, the trick now is there's a lock. One of the lug nuts is a lock nut.
Yeah.
And if you don't know to look in your package in your glove compartment for that special nut, that the device that unlocks it, you can't get the tire off.
Right.
Anyway, I don't think the world wants to hear about my troubles. How was your evening?
Yeah, everything was good. I mean, it was a beautiful night last night. I went to I mean, I don't know if you know this. They still have mail. Like you can send things in an envelope, put a stamp on it.
Yeah.
Right. The post office, that whole deal.
Yeah.
So I had a couple of things to put in the mail, and usually I wait to go into the post office because I know the people, say hi, whatever. But I thought, you know what, last night, such a beautiful night. I'm going to walk to the post office. And so had my little device listening to the Cubs game on the internet, and had a just really nice walk over to the post office. It was a cool night. It was just the right temperature for walking, and it was peaceful. It was great. It was like no flat tires, no kids giving me grief about school or something. It was like clear your mind. It was great.
Peaceful, easy feeling.
Yes.
All right. Pretty good. Well, so Tom, this morning we had some economic news hit in advance of this potentially historic FOMC meeting. Let's take a peek at what we're up against today.
Right. So today, Wednesday, September 18th, 7 a.m., MBA mortgage applications, the usual, right? Housing starts and permits, 8:30. We'll talk about those results. Atlanta Fed business inflation expectations. That comes out, again, 10 o'clock. So you might watch a little bit about that. 10:30, EIA petroleum status report. 2 o'clock, we have the Fed announcement, the FOMC announcement. And that comes not only with the rate announcement, but it also comes with a basically a 1 or 2 page statement that's put out by the Fed. So that'll be focus at 2 o'clock. We might see a little or a lot of volatility come in, but also 2:30, we know follow-up press conference. That's an ongoing thing. This might be a little longer of a press conference, my guess. So this could extend into I won't say the closing minutes of the session or the regular trading hours, but it could go to 3:15, 3:30. So just understand a lot of volatility comes with those questions that the reporters ask and Powell answers. And then Treasury International Capital at 4 p.m. So a busy day today, Jim.
Yeah, no, for sure, for sure. It's yeah, Chair Powell's not going to go up there and say we cut 25 basis points. See you later. Bye. See you next time.
Right.
It's good. It's going to
or
be
cut 50,
pretty
right?
Yeah.
Whatever you think it is. You're right.
But Jamie Dimon yesterday, CEO of JP Morgan, was on the record saying the Fed rate cuts won't be earth shattering.
Okay.
So I don't know. We'll see how it goes. How about NBA mortgage applications? We're getting close to that 5 handle, Tom. The NBA mortgage application 30-year conventional rate, 6.15%. I mean, not too long ago, we were in the 7 handles, and this is like kind of front running the Fed cutting anything. The mortgage folks bringing rates down.
Yeah, and I just wonder what happens when those the rate cuts go into effect, right? Because we could talk about rate cuts, 25 or 50, we don't know, and the mortgage rates won't reflect an actual cut till it happens. So, 615 versus 629. If we do a 25 basis point rate cut in the next couple of weeks, we should see something similar in the mortgage area. Maybe it isn't 25, maybe it's 20. Maybe it's 25 over a couple weeks or 3 weeks, but I can see a 5 handle coming soon, which is, makes houses a little more affordable.
Yeah, maybe we'll see. Interesting article in the Wall Street Journal today about there's still a big divergence between those who have the higher end homes at a locked in low interest rate and those who don't. And it was interesting counterpoint there, but that's for another day.
We also had housing starts and permits, which overall were great numbers, right? Starts are up from last month. They're also up from forecast. They're at 1,356,000. They're expecting 1,318,000. So quite a few more houses starting. Building permits also issued were higher than forecast and higher than previous at 1,475,000 permits issued. Now that's kind of early in that building cycle, but it can be indicative of what's coming. Housing starts a little further down that cycle, 9.6% month over month change, expecting 6.5%. So that's like a 50% increase in the percent increase. It's over that. So pretty good. And then building permits month over month change 4.9% versus 1% forecast. So really good housing starts and permit numbers came out just a little bit ago at 8:30.
Yeah, no, that's that was interesting. A lot of the builders, they'll get loans, at least the ones I know. They're going to finance their new construction, the builders, with variable rate debt. And it's usually, SOFR plus, right? So SOFR plus 2% or something like that. So right now, the idea that SOFR should follow the Fed funds rate, and they're tracking the same. They're about 5.31 or 5.33 is their effective rate now. If that tracks it down and we end up at 100 basis points less by December, that's 100 basis points of relief on that variable debt.
Okay.
So that should spark some more folks getting back into the construction business.
Right. And that just, that kind of goes along with the reason why we're trying to cut rates, right? Is to stir up the economy again.
Yeah, for sure. Tom, we also had API crude oil. We should probably talk about that. That came out last week. These are the inventory numbers, private kind of sector inventory number estimates week over week. The crude oil stock change in overall, the global number, the U.S. number, 1.96 million build into the inventory for crude. Forecast was minus 0.1 million. So a big miss there. There's more than they thought. Cushing stock at Cushing, Oklahoma, it was a 1.4 million draw though Previous was a 2.6 million draw, more in line with what we're hearing in the press.
Yeah, same. That, and that could explain why crude had a little bit of a breakdown since last night's Globex close. Gasoline stocks also kind of did the same thing, right? Put into storage. Previous was a draw, and we see a little bit of a dump on the RBOB futures as well. So maybe this is good news, especially for the consumer, right? If crude oil is going down, that reduces the cost of not just transportation costs, but also production costs, right? And gasoline certainly is following suit. Gasoline futures under $2. Not bad.
Yeah, that's good news for us that are driving to Grandma Keggs' house on Thanksgiving and Christmas. So I'm happy.
Driving to Italy, driving to Europe.
Yeah. I got to get my international driver's permit. I have a story for that one as well. I'll tell you later.
Oh my goodness.
Anyway, yeah, that's it. I mean, the other thing I wanted to mention, Tom, was GDP Now's latest estimate for third quarter is 3.0%. And then the New York Fed staff nowcast for the same metric, 2.6%. According to these guys, no recession in sight.
Well, it is GDP Now. That is third quarter. We're coming to the end. We've got 2 weeks, less than 2 weeks left in the third quarter. So we'll know more in October if their nowcasts are accurate. Yeah, 3%, 2.5%. It's not bad.
Yeah, it's amazing. So in any event, well, let's take a look at some daily charts time and kind of create some biases for today going into the big events later on today. This is the NASDAQ. This is the micro NASDAQ stock index future daily candle chart. Relatively simple chart here. And again, what's with my rectangles, Tom? Why do they keep bouncing around?
Did we roll?
No, I don't know what I'm doing. But
in
anyway,
December. Okay.
Yeah, we have a little resistance here right now, Tom. We're kind of 1, 2, 3 kind of baby candles in anticipation of what's going to happen on Wednesday right now, tracking 19,725. I have this resistance area up here, even though we probed through it around 772 right now. And then the cross, though, the fast moving average cross, the 8 exponential, is starting to separate from the slower moving average at 21 EMA.
Yeah, it's looking like a bullish setup. Right, you're above the moving averages. The moving average has given you a bullish signal with that cross.
Yeah.
I don't know if you have this on your chart. I don't think you do. I've got a 50 simple on my chart.
I used to have I used to have a 50 EMA on my chart, and it's like someone removed it. It's
Okay.
gone. I could add it real fast. Or I'll add the 50 simple since you mentioned it.
So the reason why I say that is the 50 simple is about to be crossed by the 8 period exponential.
All right. What color should I make it? We'll make it blue.
Oh, that's what I did.
Did you? Great
Yeah,
minds.
I've got a blue dotted or dashed, I should say.
Oh, there it is.
Wait,
I did it wrong again. Shoot. Indicators. Don't forget, you want to calculate.
you go all the way down. On the left. Sorry.
Gotta get the right one.
Go all the way down. There you go.
Not on bar closed, but on price change.
Yep.
There we have it. All right. They're all tangled in love right there. Look at that.
So I pay attention, the severity of the cross usually, I think, depends to some extent on how that moving average is created, right? How many data points. So 50 is a medium term on a daily. So it's a little more important when the slower term crosses a medium term. It indicates a longer term possibly indication. But of course, as we know, these can whipsaw as well, even if it is a 50.
Yeah.
So
yeah, for sure. So I hear you though. I mean, we're it's nice smooth though. Look how smooth it is because of all that data point, right?
Right.
The 8 exponential is not quite so smooth because it's less data. And I have a 200 way down here. That's the Armageddon line down there.
Yeah, it takes a lot to move that line.
Yeah. So in any event, again, anticipatory, I expect this market to kind of trade range bound, at least until the FOMC meeting. I could be wrong. I don't know, but that would be my guess. I mean, there might be there's going to be volatility for sure. I mean, especially think about, it's pretty much 50-50, right? And maybe it was 65-35 this morning, 50 basis points cut versus 25 basis point cut, but it's kind of balanced. It's the most balanced we've seen for a long period of time.
So when you
the day of the meeting.
right, when you say balance, it's indecisive.
Yes, I was being nice.
You were being nice, and I think it's okay to be indecisive too. In this case, we don't know what they're going to do.
Yeah.
You and I have our opinions, and they might be a little bit opposing, and we have our reasons. One thing that comes back to mind is John Williams. I'm trying to reconcile two things. John Williams saying a 25 basis point rate is appropriate.
Yeah.
And one of our guests, and I forget who it was, maybe it was Dan, maybe it was Blue, that said, Powell likes to have a unanimous vote, right?
Yeah.
It's not just about here's the rate and it's 11-1 or it's 10-2. He wants 12-0, right? So if Williams is going out saying 25 basis point and Powell wants unanimity, is it 25 basis points? Or does he have to work really hard to get John Williams on the 50 basis point side of the fence? So that's kind of where I'm thinking.
Yeah, they have well, these guys talk on the phone all day long, every day, right? So it's not like they're going to the meeting. It's like, hey, what do you think?
Right, right.
Hey, Esther, what do you think? So they kind of know what everyone's point of view is going into the meeting. And yeah, it's better off for sure for the committee to be unanimous, right? But maybe they won't be unanimous but when they finally vote, right, they'll be like, all right, I'm going to lose this vote 7-5, so I'm just going to go with the majority, not to embarrass anybody, not to why should I take the risk of being different? At the Bank of England, they don't do that. Those guys and gals are like, this is what I did, this is what that guy did, and then they just say it like it is. Here there might be a little bit more of that, let's kind of cover for each other and kind of bring a unified front.
So just in real quick, because we do have some time before the opening range. I know we have other charts to go to. Real quick,
Okay.
What do you think?
Okay.
25 basis points, what happens? 50 basis points, what happens in the market?
I think 25 basis points with a dovish statement, right? Where they're going to keep rolling, folks. Everything's going to be good. In my mind, would be ideal. I think the stock market I think the equity market in that environment will break and then recover very quickly.
50 basis points?
50 basis points, I think you're going to see the opposite. I think you're going to see the market and again, it's my opinion, everybody. Past performance not indicative of future results. I think 50 basis points, I think the equity markets rocket up. I think you get positive push on price, and then it does the opposite. Then it kind of reverts back to where we started. So I think at the end of the day, we're not, like Jamie Dimon said, I don't think it's going to be earth shattering, but I think there'll be a lot of volatility with those two different possible outcomes.
Right. Either way, there's volatility, right?
Yeah.
Okay.
Yeah, but we'll see. I mean, I don't know. I know less than most folks listening to me right now. So anyway. Oh man. All right, let's keep rolling here. We're way behind schedule. That's all right. Even the S&P, we got all day time.
Yep.
Mike Burke's out today, so we could have all day today.
Take over?
No, we could just keep talking. No one could stop us.
I know. That's right.
Except for Kevin.
Kevin can stop us like that.
Even the S&P, again, I mean, we're coming up against this area of what I'm going to call resistance, approximately 65, right? Wait, I'm in the wrong month. My bad. December. I know we're 5,700 plus. Let's do this again. Similar. We're coming up against this area of, let me start over. We're coming up against this area of resistance at 57.26-ish, give or take. Again, couple baby candles here, but again, it's edging up. It's edging up.
Yeah, no one's really willing to stick their neck out today. I think, maybe there's some news that will unknown news, or maybe we had really good housing numbers, and what did the market
Yeah.
do? Not much,
Yeah.
right? So
Yeah.
I think this is complete, anticipatory and looking bullish, right? I mean, yeah,
Yeah.
you've got that resistance area you pointed out, but you've got higher low, and not unexpected that we wouldn't have a higher high, not totally unidirectional on an anticipatory day, but you're above the Ichimoku cloud, you're above your moving averages. You've got a rising RSI, like all these things kind of lead up to a bullish day.
Yeah.
And I think worst case, maybe we pull back to a supportive moving average if the market reacts that way, but we'll see. I think we'll know more at 2 o'clock.
So what? So let me ask you the question. What do you think is going to happen on two different outcomes here?
I I think 25% the market does rally.
Okay.
I'm not kind of looking at the path like you are. I'm not looking for like instant, what happens at 2 o'clock and then settles down. I just think that 50 basis points could indicate some panic about the labor market,
Hmm.
whereas 25% is more a stoic, calm approach to the overall solution. So
Yeah.
if we need to later, let's see what 25 does. Let's do 25 in November. If we have to, let's do 50 in December, but maybe they keep kicking that can down the road like they did with the decision to cut. Remember, they dot plot 6 cuts at the end of the year
Yeah.
last year was 6 cuts, right? The extreme, six
Yeah.
cuts.
Yeah.
We're in September, we're doing our first one.
Yeah.
So they can kick the can down the road. What
Yeah.
should they do? I don't know, but I think 25 basis points might be a little bit of a surprise when the market's expecting 50. So that's the wild card. I don't know what that would do.
Yeah. So to that point, another variable that you just brought up that we didn't think about, I didn't think about, was the dot plot, right? So 19, Fed people are going to create, express their opinion on everything from GDP, inflation, and where they think Fed funds are going to be on a forward going basis, right? So if that dot plot is seriously dovish, that could also freak everybody out with respect to the employment situation.
Right, right. It puts, it kind of puts in that question we've heard before. What does the Fed know that we don't, or what are they looking at that we're not focused on as much? How much are they, they're going to pivot. They're pivoting to the labor market, right? So what do they think about it? 50
Yeah,
basis point cut is like, I think they're like, hey, this is a serious deal.
yeah,
25 is, yeah, it's one of our mandates, but we're going to do this in a calm manner.
yeah. Yeah. So, all right. Well, let's keep moving, Tom. We're only at the even the S&P. Maybe. Well, let's go ahead through the stock index futures really quickly. We'll try to
Yeah.
get to Bitcoin before the break. So, Russell 2000, a little baby body of a candle today, but we had a different candle yesterday. We had a pretty big green candle here, and we even kind of wicked into our area resistance.
Yeah, that yesterday is looking pretty bullish. It's at one point in the day it did come back about halfway. It retraced about a little more than 50%. What I see
Hmm.
here is you still have higher highs, higher lows, higher close.
Yeah.
Everything we need for a bullish trend. Same kind of factor going on that we saw in the Nasdaq we see in here, which is the 8 is crossing the 50. Now, the difference is these are all or both of those moving averages are trending up. We didn't see that with the Nasdaq. Nasdaq, the
Yeah.
50 was trending down. To me, that's a little more bullish, and there's more probably, possibly more opportunity. We've said that if rates get cut,
Mhm.
Russell might benefit more than other stock index futures.
That's right. I like that for sure. I'm just a little worried though. The RSI and my modified RSI is we punched up against 70. Now we're back at 70. Usually we have I just went back in time this morning and saw and looked at when this occurs, and a lot of times we do get at least one day of a sell off when we're at this point. But anything could happen because it's a unique day today.
Well, and I like that, in this case, RSI, those highs that occurred previously,
Yeah.
they occurred under 70, but
Hmm.
that was at points where price in the Russell were higher, right?
Yeah.
So
Yeah.
price isn't extending. The momentum is still there. Maybe price will follow the indicator and go a little higher, but we'll see.
Yeah.
To me, 25 or 50 basis points, it just to me is how much will the Russell go up, not if
Yeah.
it goes up. But that's just
Yeah.
me.
And by the way, Tom, first to chime into the chat, Engineer Bear and Jen P. Special shout out for Engineer Bear and Jen P for being the first to the chat.
Yeah, great. Thanks for coming. And you know what? We've been talking a lot. We're going to take a quick break and we'll be right back at it.
Sounds. All right, we are back. NinjaTrader Live. My name is Jim Cagnina. My partner Tom Schneider are your hosts today, and we're looking at a daily gold candle chart right now, and we have one of your favorite bullish haramis.
My favorite. Thank
I
you.
would call it. I'd call it an inside bar. It's like this is an inside bar, and but you started throwing around the fancy words like harami, so I'm learning, man.
Yeah, no, I mean, yeah, it's I don't know if it's my favorite, but I can see where you'd attribute it to me because I did call it that. I did not originate that, of course. That was in Steve Nissan's candlestick book. But really, it's kind of a weak reversal, right? So we see it. It's a green candle following a red candle. Yeah, higher low, but not a higher high yet. So to me, it's kind of, again, maybe a little anticipatory. This market, I think, is really wondering if it's 25 or 50 basis points. Because if it's 50, then more people will jump on the gold bandwagon, I think.
Yeah.
I don't know if we'll see a retracement if it's only 25, but we could. This might be pricing in 50, and if we get 25, that's disappointing. Still bullish on gold. I mean, you can't really see a downtrend in this market.
No, right. Again, I'm thinking we're going to be sideways for a while here. I think we've already anticipated that rate cut. The U.S. dollar, interestingly enough, is also not interestingly enough, but is weaker against all the currency pairs, right? So I'm not surprised we have a little trade lift up here.
And that makes sense, right? We're weakening the dollar by cutting rates. So why wouldn't
Yeah.
currencies, denominated in US dollars get a little bit of a boost?
Yeah. Yeah. Let's hit up that crude oil. We're in November now in crude oil, everybody. And by the way, Paulie, I got to address this question from Paulie. Thank you for that email, all the emails this morning. Including the one with the Viper in it. But Paulie says, how about 3 Democratic senators that want 75 basis point cut? I think that the Democratic senators have prepared themselves for the recession, and they could say, I told you so. Yeah, so I used to think that too. I used to not like that. It's like, hey, the Fed is independent. You shouldn't be chiming in, right?
Yeah.
But their job is to be an advocate for their constituency the best way they feel like they should be, right? And this is one of the ways that they're being an advocate for it. So I'm not upset about it. I think it's okay. The same way that one of our elected officials might say the Supreme Court should act, this way on this issue instead of that way. Again, they're being an advocate for their constituency. So I'm not reading into it. I think the Fed's going to do what they think the right thing to do is, and they're not influenced by that.
Yeah, I'll just add, I think our senators, whatever side of the aisle, I don't think it's one side of the aisle at all, have shown a lot of times they know nothing about economics. They can't grasp common economic principles. I really think there should be any incoming congressperson should go through economics 101. Just never happen, right? But as a matter of course, and we see it all the time when they talk about different economic policies, they show they don't understand it. So I think the Fed's doing what we kind of do, which is like, okay, whatever, roll your eyes, say thanks for your opinion, because we can have opinions, but 75 basis points never going to happen.
Right. But I would say that a lot of especially the senators, they have, and I learned this firsthand when I was locked down in the Senate office building because of an active shooter once. So, I was in Senator Kirk's office with all of his staff, and that staff, they're very smart people. They're very smart people. A lot of them are young, yeah, but they're very, very smart. So they're getting good advice and good analysis. So yeah, maybe on their own they're not, Blue Putnam level economists, but they're getting some quality advice. So again, I'm not going to be I'm not going to be negative on these guys. Anyway, sorry, Tom. I mean, that's just it's a thing, right? And if I was a senator, let's say the state of South Carolina says, Jim, we want you to be a senator. I would freak out. I mean, there's so many issues that I know nothing about, right? I got to rely on somebody
economics.
Including including
and I'm not
futures.
saying you, I'm saying most senators.
I'm trying to think, but nothing happens.
So
opening bell has rung. Should we go to the E-mini, or do you want to go to Bitcoin?
Yeah.
Oh, we didn't do crude. We didn't do crude. Should we
didn't do anything. We're so far behind schedule. We have all right. So real quick, folks, crude oil again. We hit a peak right here. A little bit of a peak right here. Maybe because of the API, maybe not. Baby candle still big white buyer's wick. Eight is the 8 exponential still pushing up price time.
Yeah, we're right at the 21. I mean, this is kind of a pinched market. API numbers, I think, weighed in a little bit on this because it could be considered a preview of what's going to happen today at 10:30. Yeah. What's going to happen when we get the EIA numbers. So if those numbers last night reflect or if EIA numbers reflect what happened in the API last week, maybe we'll see a little bit more downward pressure. Okay. Buyers come in, big buyers wick, but we could look at it as possible probe if there's new data coming in.
Yeah. For sure. All right, let's take a look at the Bitcoin, then we'll get to the 10-minute chart here. Bitcoin caught a little bit of bid yesterday. I was kind of like go, and then sellers just brought us right back down. Look at that seller's wick right there, pretty big. We're still just south of that 60,000 number, Tom.
Yes, just south, but we did trade above it this session, right? So higher high, you're above your 8 and your 21. That's good. We're still above that. And 60,000 is that kind of normal psychological number. This is still looking bullish, even though today is a little bit down day. I could see, it's also waiting on 25 or 50 basis
Yeah.
points to an extent. So we'll see. I think 2 o'clock we might get some volatility.
Oh gosh, yes. Gosh, yes. All right, let's get to some 10-minute charts. Let's go back to the December. Now, notice December has, it's almost totally rolled, right? We have 193,000 contracts traded so far this morning, which is very low. And then we have 96,000 traded in the September still. And so you can see that ratio is more than 2-to-1 on December. It's going to get to 0 by the end of the week. So we are going to be trading the December contract today. Let's get to that 10-minute chart.
Speaking of very low,
Yeah.
we made a new low
Yeah, we did.
right here in the opening range. So institutions come in. They weren't too happy with 5709, 5708. Now we're below 5700. And that's kind of where the shelf was. If you look back 4 o'clock to 4:30, oh, what is that? 4 o'clock to 5 o'clock, you see that cluster
Right there.
of short body candles that turn this market around.
Yeah.
We tried to get back down there again at 820, and interesting rally, right at into that 8:30 news event, but it couldn't sustain. And now institutions, now hedge funds, etc., the big players, if you want to call them, the big participants, they're pushing
Yeah.
this market down. Question is, in this case, where could it go? And that's where we have to kind of pull that chart down a little bit, scrunch up our y-axis, and see what levels are interesting.
It's like there's a lot of like air between the low wick and previous sessions lows. Now it's only 20 handles though.
Yeah,
So
I
it
was
looks
just gonna
worse.
say.
It looks worse than it is, right? We've
Right.
only had a 15 handle range today, session wide so far after all of this trading, all this buying, all this selling. 15 handles. That's it. So again, this is going to be sloppy, Tom. Between the equity market's going to be sloppy between now and 2 o'clock.
and, and we've seen bigger moves, right? In one 10-minute candle than 20 handles, right?
Yeah.
This candle is what you said. It's 12 handles, 15 handles, whatever it
Well,
is.
this guy high to low right now is it's 4 plus 9. What's that? 13 handles, right?
13 handles. So
Yeah.
okay, it looks big because it's the dominant candle on the chart, but I'm not interested in doing anything right now.
Yeah. No, I'm not. We'll see though. There's still 3 minutes left in this candle, and we're still not equivocally passed through my rectangle yet.
Yeah.
We're at it, but buyers are coming in at this level so far. That's how I would characterize it. Just not enough follow through on the downside. Cumulative delta is like neutral almost.
Yeah, it was positive. Yeah, see, it was positive, and then last candle, it slid below 0.
Yeah.
The trend, I think, is what I'm worried about. If this continues in that trend, more sellers, they're not taking profits unless they carried their position overnight. They're not taking profits.
Yeah.
So to me, that is a bearish indication as well.
Yeah. Okay. I'm with you on that. And CCI, look at that. That's arcing down to 200, right? It's minus 165 right here. So again, that's another sign that, and we got there quick, right? We got there from a positive state to a minus 176 right now in a candle and a half. So there's downward pressure for sure. Let's get this thing out of here.
Maybe we take a look at NASDAQ.
Yeah, HP has a great question too.
Okay.
Let's go over to NASI. It's looking the same here. A lot of systematic price behavior so far. Oopsie. I don't want to do that.
And Scott K has a great recommendation. Love it.
All right.
Give the center, and maybe not give him a class, but give him any book by Thomas Sowell.
Oh, geez. All right. There we go.
He's great.
I like that guy, but
yeah.
So this is looking a little bit pretty similar, although we're not making new lows right here. We got a nice area support, approximately 663 right now. Cumulative delta is usually negative right now. CCI is usually unusually negative as well. It does look like we're going to break and make new lows on this candle.
Yeah, that's at about 657 and a quarter, 657, 375. So
Yeah.
That's it's 20 handles away. That's chump change on the NASDAQ, right?
Chump change. Yeah. Well, it depends if you're long or short, I guess.
That's chapter
Oh,
17 in the MTA handbook, chump change.
there we go. HP says, based on your combined experience, what is the best time frame for day trading? 5 minutes, 10 minutes, 15 minutes, etc. So my opinion is HP might. All right, so a couple of things here. This is a big question, but we in a regular trading on a regular trade setup, right, where I have multi monitors. I'll have a daily chart over here. I'll have an intraday chart over here. I might have a different kind of chart over there, tick chart or something. And I'm looking at different time frames at the same. I might have a 60-minute chart. So I'm looking at multiple time frames. When I'm making my trade decisions, though, I like to think in terms of how long do I want to be in this trade? Am I looking for a trade that's going to last 30 seconds? Am I looking for a trade that's going to last an hour, 2 hours, 3 hours, 4 hours, etc.? And so I take my time frame, my 10-minute time frame, when we look for trade ideas, is associated with the idea that I want to get in and out in less than 60 minutes. So I have a 6 times multiplier in my head, right? And so and maybe you get out right away on your trade, but I'm looking for that as my sweet spot. 60 minutes in and out for this trade to work. So if it was a 30-minute time frame, I'd look at a 5-minute chart to make that to look for support and resistance and all the stuff we look for. That's just the way I look at it. Now, I would say pick whatever you just pick one and get good at it, whichever one you're comfortable with. Don't do 10 because I do it. So I don't know how you feel about that, Tom.
I agree, and Fly It Here had a great response. All of them, really, it is looking at different time periods to see what's going on. If you make a decision to go long or short, and you see, a nice setup in the 10-minute chart, you might miss something in the 5-minute chart or the 3-minute chart or the 1-minute chart. That might say, hey, watch out, or vice versa, right? So, I would look at, don't look at every combination, right? But feel better, feel good about kind of a medium term, a longer term, a shorter term. Shorter term could be the one you're trading in. I most likely would follow Jim's advice, though. You have an objective. How long will it get you, to get to your objective, and kind of use the chart accordingly. 6-time multiplier, if you've got if you think the objective is in 10 minutes, then you could use a 5-minute chart or a 2-minute chart, 3-minute chart, 1-minute chart. That's great, but just realize that when we look at a 10-minute chart, there might have been something in the 5-minute chart or the 1-minute chart that suggested we're going to reverse at the end of this 10 minutes, right? We're not seeing it in the 10-minute, but that's okay because our time period might be longer.
Yeah, exactly. Yeah, for sure. Fly there says I look at a 3-minute. I look at them all, but I'm reacting on a 3-minute for a day trade, and 3-minute charts are very popular. And remember, 3-minute divides into 60, 30, and 15 pretty nicely.
Yeah, and I think it's Fly It Here.
Oh, I'm sorry. My new glasses are ready.
Oh,
I got to pick them up at Costco, but because of the flat tire incident, I have to wait.
Oh my goodness.
That gets fixed. I know. Mrs. Keggs was going to go for me. So, Fly It Here. There we go. Just call me Fly. All right, we could do that as well. So, yeah. So, and it's a personal thing, man. I mean, you might get a 3-minute, and you might have epiphanies, and you might, become an expert at it, and get your muscle memory going and finding patterns and ideas. So Mike Burke likes the 5-minute chart. He looks at a 5-minute.
Yeah, and I think one thing to realize, we're going to be talking about this, I think, later this week. If I recall correctly, we're going to be doing intraday studies. some intraday studies don't matter what time period you put it on, right? When we look at previous high, low, and close, we look at the pivots, we look at the opening range. Doesn't really matter if you're on a 1 minute or 10-minute chart, those won't change. What will change are your indicators that are based on time data, like an RSI, like a moving average, like stochastics, whatever momentum indicators you use. So you won't lose, and VWAP, same thing. You won't lose the VWAP bands. They'll be the same whether it's a 1 minute or a 5-minute chart. What you will see different are your momentum indicators, your Bollinger Bands, your moving averages. So, that's just the cool thing about some of those intraday studies is doesn't matter what chart you put it on,
Yeah.
it's the same. So I think it's great thing for intraday studies.
Yeah. All right. So, so again, we had a major benchmark candle here, right? Spanning almost the whole range of the day here in the micro Nasdaq. This is going to be like the theme for today. Wild volatility to nowhere, I'm going to call it. So the candle is big. Then we have a turnaround, right? So again, buying at the bottom of the value area, maybe selling at the top of the value area. That might be a thing. I don't know. But point of control is in play. It's a really nice volume profile today. It's very, very symmetrical, very bell-shaped curve here with the point of control right at 700. So kind of a nice round number also to keep in mind as well. So we'll keep our eye on this market when for the trade setup idea section.
Just realize too that point of control right at the pivot,
Yeah.
that also is about the piercing level of the previous candle.
Yes.
Just so happens there's no rhyme or reason for that. It's coincidental, but it also, when I think of a recovery from this kind of move, I want to see the next candle break above that piercing line just to give me a little bit of confidence we might be regaining where we were. We look at the opening range, we were trading upwards into the high of the opening range.
Yeah.
Can we get back there? That's the question.
Yeah. Exactly right. Exactly right. So Tom,
yeah,
let's kind of go over to crude. Crude is interesting to me today.
Oh, wow.
Just going back to 4 o'clock. So API came out around here yesterday with that build, not at Cushing, but general.
I think it was about 3 bars after.
Oh, really? Like right here?
Like that big, yeah, right there.
Right there. Okay.
4:30. It comes out at 4:30. So that's the 4:30 to 4:40 candle.
Yeah. So I don't know if this area here moved this market that much, but we have a steady sell-off all night long, all the way up until we get to previous sessions lows, which was at about 6 o'clock this morning.
Yeah, and now and right and saw a reversal. Now, what's interesting with geopolitical events being what they are, it seemed to me that if you haven't heard, the pager attack on Hezbollah members could be kind of diffusing a situation, or it could be exacerbating it. If you think it's exacerbating it, they might have just neutralized a lot of the fighters, right? The people who are actually could be fighting, as resistance or whatnot. So I don't know if that gives credence to if geopolitical events being what they are, an intensity in a conflict would spike the price of oil, in my mind. Maybe that's what this is about. Maybe it's about, okay, there's digestion of what happened yesterday, and then others talks about this conflict escalation, right?
Yeah, it's just the whole situation is horrible.
Yeah,
it really is. I mean, I had to go into my attic. It's not really an attic, but I call it an attic. Find my box from 1990. Found my old pager, and I threw that thing out. Man, I'm not trusting that thing.
I think you're probably safe.
I don't know. I probably have a few enemies out there. I don't know. Maybe. Anyway, yeah, V-shaped recovery here. So this is a really nice kind of move up as well. So this is one of the markets I'm going to be looking at for a trade idea in a little while.
Yeah, what worries me a little bit is the constricting nature of the VWAP bands, but that doesn't, it kind of comes with a V-shaped recovery, right? We have to see if we'll continue the trend up to get those bands moving outward again.
Yeah. All right, we'll take another peek in a couple minutes here. Let's go to gold. Gold right now.
Gold, please.
Yeah. So I don't know what to make of this chart, Tom. We're right at VWAP right now. It's a little bit erratic. What do you think of this pattern in general?
I see a trend channel. If you look at the low from about 120 last night, yeah, exactly.
All right, let me get my trend channel thingy going here. All right, 1 o'clock last night, about or what right here. Okay.
Yeah. So kind of redraw that line you drew.
Yeah, I'll delete that first one. All right, so I'm gonna redraw it, and we click up here.
I'd go, right. I wouldn't go to the top high there. Just go to no. I'd move it down. Go up a little bit. So I'm looking at the pattern to the right.
Oh, so about up like
yeah,
this?
right there. Yeah, a little lower. Yeah. I go to that first peak high. Yeah.
There we go. Okay. All right. There we have it. That is a trend channel, a la Tom Schneider. Yeah, so it's a big channel though, Tom.
It is.
We're breaking through it right now, but again, it could just be a wick through. And I don't know if my bottom of my channel is actually really good. I mean, it's loosely fitting. Well, I'll stop messing with it.
Well, so the way I think of it is the beginning of the trend dictates what's going to happen later. So I like to connect the two lows that start the trend, right? So the low at the, I might raise that lower. Yeah, I might raise that there.
Yeah.
And keep that there, and then maybe, lower the start. Yeah, exactly.
All right.
Something like that.
All right.
Because what we're doing is we want to say, okay, here's the trend as we see it early, and does the market stay within this trend? Now you could have made the higher part of the trend channel a lot lower, but we know that the market moved up. We're concerned with now where is this traded, and how is it contained? I think you contained it pretty well here. See if it stays contained, and if it doesn't, you have targets on the bottom.
If it doesn't, gold's going to get in trouble.
Yeah. Well, they'll have to answer to you.
Yeah. Stay contained.
Contain yourself.
Right. Anyway, let's see what else we got cooking here, Tom, that we should take a peek at. Got about 5 minutes before the opening range is over. We didn't look at the Russell yet. Or what?
We didn't look at the Dow. We didn't look at the Dow yet.
The Dow. Okay, the Dow.
Dow's not getting a lot of love.
Dow is slowing. I gotta wait for my data to come in there. Ooh, jeez, look at that. You're right. Point of control is way up here. 42,082, 42,082, right by the pivot again. Globex close is here. We had a little bit of support there last night, 4 o'clock in the morning after the European Open. And then boom, major sell-off happening here.
Yeah, and this is one where I think that order flow volume profile drawing tool could come into play, right? Because you could just use it on the opening range and get a better sense of where the point of control is. I mean, we can see it to some extent, right? We kind of can see it that it's at around 41,980 or so, but you can see the distribution. It's almost like two broken distributions. You don't really need to do it, but I like to do it just to show that, here's the volume before the market opened, and here's the volume after, and it's almost like equal. Equal volume, just a different shape.
Yeah, and you can do this all day long, as a matter of fact. I mean, you can do the European Open. Let's do that. Let's add it there. Let's go to my order flow volume profile. I'll go to the 310 candle here, 3 to 310 candle, which is right here. And 1, 2, 3, 4, 5, 6. So that's what, that's the European volume profile. I don't know that helps me any right now, but nice point of control on the opening range volume profile at 41,981.
Yep.
But this is just hitting rock bottom, Tom, and it's still digging.
Yeah, it's kind of wrong way, Charlie,
Yeah.
right? It's
Yeah.
NASDAQ and Russell are getting a
Charlie.
little bit of a bid, and E-mini basically unchanged, but Dow down
Yeah.
today. Dow down 100 points in the futures.
Yeah. We'll keep our eyes on it. So, yeah, Tom, who's here with us today? We got a great group of folks here on FOMC Wednesday.
Yeah, I mean FOMC Wednesday. It's like Christmas finally came. Jen, in addition to
Christmas.
FOMC, Jen P is here. Raleigh. We know Paulie H is here. Nola Boy, good morning. For Money is here. Hida and Mark Mosqueda is back. HP, as we saw. Simo is here. Mark R and Jeanette. Yovan, Robert W in Wake Forest, North Carolina. Boston J is here. J-Man 2005. Michael Crump is back. Good morning. Lewis H is back as well. So thanks. They're in the NinjaTrader chat. We also have chat at YouTube. Engineer Bear, you mentioned earlier, is here. Six String Dow and Nicholas Lobo, Cos Perone, The Lieb, Kyle Penrod is here. Eric 856, Jorge Castaneda, and Kenny Scott is here. Kenny, we generally start at 9 o'clock. Just so you know, we leave the chat room open a little bit before so people can jump in. Ron in the money, I think is what he's saying. Good job. Quincy Smith, Ace J Stevens, good morning. Infinitely Training with Leo. I think Training with Leo's been here before. Rampage is here. Bo Hunter and Todd Musser. Anissa, good afternoon. Scott K, if I didn't say your name before, good morning. D Merlo and Thomas Bolatow are here, as well as Mark Weebush. Elizabeth D is back. Good morning, Elizabeth. Maybe we have a new name. I'm going to try to say this correctly. Malik Shalomo Trading. Good morning. Welcome to our show. Todd Musser, I think I said Todd was here. Fly It Here, we know is here. Mr. Freeman, good morning. Let's see who else. Crypto John is back. Kevin Stark is here. Okay, I like this one. Lincoln Omblets, not omelets, but omblets is here. Lincoln, welcome. Ilda Amador is back. And David Deemer, I hope I said that right, David. Looks like a new name. Good morning and welcome to NinjaTrader Live. What a great group.
Appreciate everybody being here. We have that on the YouTube channel. There's that thing that looks like this. Thumbs up. Don't be shy. Click on that. Click on that guy. And appreciate everybody being here, being part of a positive community. This is a totally positive community. Everybody's here helping each other. That's what makes this totally unique. So again, appreciate everybody here being right here. And by the way, Tom, it's a little early for Engineer Beer.
Oh, yes, I know.
When you said that, I got all pumped up. I'm like, where?
No. Yeah.
Too early.
Never too early. Quincy Smith, I want to make sure I said hi to you. I don't recall saying your name. So Quincy, welcome. But
Michael Crump.
And Michael Crump. I said hi to Michael. He's here.
All right. Well, let's take a quick break and look for some trade ideas, Tom. We're like up against the half hour.
Sounds good.
All right. All right, we are back. NinjaTrader Live. My name is Jim Cagnina. This is Tom Schneider, my partner, with me here. We are looking for some trade ideas, and I have so much respect for your trend channel, Tom. I want to try to get long a couple of units in the micro gold right above that channel. Let's see if I can get it.
Yeah, the market has to come back down, and it wicked through it. The question is it holding now? I mean, we still have lower high, lower low, so we could, in this candle or the next, see that we trade down there. I put an order to buy 2 at 97. You talked me into it.
Ah, right. I like it.
So
So we got to get a little bit more. We got to get another test, right? Now the problem with the trend channel is you got to keep tweaking your order a little bit, right? If that's the concept. If the concept is, hey, if it's gonna approach the trend channel and fail, 4 bars from now, this order might be out of whack. So we'll see if we get it now, and just hang tight. And I know it's kind of a weird looking. It's a counter trend kind of idea, right? And we have that big wick of the previous candle. Buyers were coming in down there as well, but dollar's still pretty weak against everything. Not really weak, but weak enough for me to be excited about this.
now I got my fill. Did you get your
So did
fill?
I. Yeah. I'm long at 97.9, and I'm shooting for the top of the value area, Tom. There's a little
Okay.
bit of a volume node right here. I know I'm being a little picky. I'm kind of a little bit nuanced here, but this is where I want this market to go to, and that's 2602 spot 2 for one of the units.
Okay, I'm going to be a little more conservative. I'm going to go point of control right at that psychological 2600 number
I like that.
and get 1 unit off, as we are wont to do, which is to say, I like the multiple unit trades in the micros. I'd like to get 1 unit off and then try for a runner. Now, today might
Yeah.
not be a runner day, but we do have an upside target with that. Couple of things. One, the trend channel high, right? The resistant
Yeah.
line on that trend channel. Like you said, the opening, the value area high. That's also a
Yeah.
place we could go. And then you have
Yeah.
some target wick. So plenty of targets on the upside. It's just, if this market gets a bid, which maybe it won't till 2 o'clock, and then I'll probably be out of the trade. But if this market gets a bit earlier, something happens and sparks this market, then we have all day to get those targets. So
Yeah. So let me be patient here. So far, so good. Were you looking at another market, Tom?
I was looking at the micro Dow.
All right, where's my micro Dow at? Of course, I can't find it anywhere here. Oh, here it is. I found it. MYM is the ticker symbol here. Yeah, this is. I don't want to. I know we were thinking about going short, Tom. I got to think this is going to be a sloppy morning, and I think we're going to end up reverting to unched in most of these markets. I could be wrong though, but that's what I'm thinking.
So, a lot of things here that suggest bullishness, right? Point of control is way up here at 42,000, above 42,000,
Yeah.
right? 4281. You've got yesterday's close, which held as support for so long, right? That's the unched part.
Yeah.
I just, at the time I put in that order, I just saw cumulative delta coming down, selling.
Yeah.
Right. So my thought was, if that continues, that's a breakdown trade, right?
Yeah.
I'm going to leave it in there, see if this
Okay.
turns around and continues, but we are positive on cumulative delta, and it is starting to turn green. So I might not even get filled, and that's okay, right? That's okay if I do a breakout outside of the opening range and we don't trade outside, then I'm not in trouble with the trade, right? I'm not underwater. There's no trade there. So I'm okay with that.
Yeah. Okay. I'm with you. I'm with you right there. The only thing that's stopping me from going long right now is the CCI. Even though it's angling up, it's still negative 204. So
Yeah.
that's the only. So I'm a little that freaks me out a little bit. That's too bad. If we were driving toward minus 100 right now, in other words,
Right.
things were moving up quickly, then I would be like, all right, let's try to get long here. But it's not happening. So I'm gonna keep my. I'm gonna be patient. We talked about this with Creda the other day. Patience is key, man.
Yep.
Patience, patience, patience. By
Speaking
the
of
way, Tom,
patience,
yeah.
we're being very patient, I think, about talking about our contest.
Oh yeah, that's coming up. That's gonna be fun. Come on, it's the YouTube contest. 100,000 subscribers. We're almost there.
Right. To celebrate, we are going to give away to one lucky winner a swag
Continental,
package.
it has to be continental US, unfortunately, but
Right. We're not giving it out to everybody. We're going to pick from a group of emails that if you want to participate, send an email to learn@ninjatrader.com. In the subject line, just put in 100,000, 100K, something to that effect. You want to put 50,000 plus 50,000. I wouldn't put it past you. Whatever you want to do, just make sure that that email comes in. We will let you know when we hit 100,000. It's any day now. Looking at my watch, and when we do, then we will, give further instructions as to when we'll pick the winner. But 100,000 is pretty exciting.
yeah, for sure. It is a little intimidating thinking that for my seat, but it's great. More the merrier, man. High tides lift all boats. I say that all the time.
So can we go back to our gold trade?
Yeah. Yeah, yeah. Yeah. Boom. Oh, you got your unit, didn't you?
It's close. It's close. So my first unit is at 2,600 spot 1.
All right. I'm gonna mimic you. I think that's good.
And what's encouraging is we just wicked above VWAP. Now, as we know, that doesn't mean there's going to be follow through. Sometimes VWAP holds once we cross through it. But the point of control being so close to VWAP,
Yeah.
gives me a little encouragement that we'll get there. What I also see is after we got these kind of the lowest, maybe close to the lowest point, at least the lowest point in recent history this morning on cumulative delta,
Yeah.
we're not seeing sellers advance that down. That to me is encouraging.
Oh, yeah. Okay. I like that logic. I like that logic. It's minus 511 right now, kind of holding there. Again, it's CCI is like bugging me. It's still it's less it's only 186. It's not 200 yet, negative 200. But hopefully this will climb. And so that'll give me hope for a second unit higher if we can get this first unit. Look, here's the trading ladder time. We're 4 ticks away. If you're a high anxiety trader, don't look at the trading ladder.
It's so
Right.
amazing the difference between watching a ladder when you have a position or not. If you
Yes.
don't have a position, it's just numbers moving around, right?
Yeah.
But how exciting when you come right up to that edge and you almost get. Now we just got filled, but now I'm thinking, okay, break even, stop and let this run, or break even, stop with the target in mind. You can do either one. But isn't it funny, like when you have a position and you get the market's so close to your target, how exciting that is?
Oh, I know. It's thrilling, right? And it's funny, Tom, because I go back to my conversation with Creda yesterday. I guess it was her evening, our day. Um, and we talked about joy, enjoying what you're doing.
Yes.
Enjoy the competition and enjoy. I don't want to use, I hate when people say enjoy the game, but enjoy the game.
Yeah.
you know and that's part of it, right? It's like this excitement, this anticipation. But it's a double-edged sword, man. You know, when you're getting close to being stopped out, you know, you get the other emotion. So I don't know. It's if you could kind of figure out a way to even turn defeat into victory by looking back, what did you do wrong? What could we do differently next time? I think you can get there.
Yeah, it's funny. It's you know that excitement comes from being right, I think. Right? Especially if you're a
Yeah.
new trader, you know, the common mistake is having that need to be right. It's a primal thing, I think, that you have to control.
Yeah.
But when it happens and you are right, what a great feeling, right? But
Yeah.
sometimes you're not right.
Right. And for new traders too, it's kind of a false flag. Like you start off hot first day, making some good trades, making money, and right away you think, okay, I can do this professionally. I can quit my job. And that's kind of like if you go to a baseball game and you catch a foul ball with your bare hands, it's like, oh, okay, I could be a professional baseball player now. No, no. You know what I mean?
Well, Jim, I'm gonna give you a real life example.
Yeah.
Last game at Shea Stadium, right? Shea
Yeah.
Stadium, Mets ballpark, famous for 1986 World Series when they hit a home run. The apple comes out. It looks outdated, but people love it, whatever.
Yeah.
But you know, however many years ago, 15, 16, 17 years ago, there was the last game. And it wasn't necessarily the last game. If the Mets won, they would force a playoff game into the playoffs, but it was the last game of the season. And
Mhm.
I had tickets and I brought my family, and we were just two kids then. And the kids were little. And the second pitch of the game, foul ball comes straight back. We were in the last row of our section, and it hits the fence, and I just grab it. Right. And I give it to John. John's
Yeah.
probably 3 years old. The next game he goes to is next season at Yankee Stadium, and somebody gets a foul ball and gives it to him. So now the next game I take him to, he's running around. Where's my ball? Where's my ball? Because every game he's gone to, he got a foul ball.
Oh, wow, that's great.
You
That's
know, but
great.
it's you know, if you know, traders, if you start out and you have a great day, right? That's great. Realize why it was great. You know, do
Yeah.
that analysis. You might have another great day the next day,
Yeah.
but you could have a day that isn't so great, right?
Yeah. Slow and steady wins the race here.
Yeah.
Slow and steady wins the race here. I was with Barbara Schmidt Bailey she's with the CME at
Yeah.
a baseball game once, and we were at Wrigley Field and line drive home run coming at us.
Oh,
And I was thinking maybe I could try to catch it.
yeah.
Barbara ducks, hits the floor.
Oh,
The ball it's coming, and I decided it was too fast. I wasn't going to try to catch it. Uh, and it hit the back of her seat.
oh,
It would have hit her in the chest.
holy, good thing she was paying
Caused the
attention.
caused the cardiac. Oh yeah, no, we saw it coming. Like,
Wow.
anyway, all right, we're back here to our trade. So I'm trying to get out of my second unit here, Tom, at that volume node I talked about earlier at the top of the value area right now. We're selling off here. We're right at that VWAP again, right at that pivot again. We'll see if pivot holds. And I'd put a little rectangle right here at 25.98.5. Here, I'll do it. I don't have to even talk about it. I could just do it. I'm fast enough. Let's open this up a little bit. There we go.
Now,
So,
Jim,
yeah,
you know, the market's moving a little bit now, and it might be too late, but
yeah,
and I think you got in a little higher than I did. Um, Mike Burke, I think, would agree with this. You don't have to move your stop to break even. It could be under your entry price, right? Especially since we see that you're running up against that support line,
yeah,
right? Now, my break even is my stop is above break even, but slightly below that support line, but close enough that if it wicks through that supportive line, I'm out.
yeah. But here's my point of view on that. Like, all right, I can get back in.
Yes, right, correct.
So let's say, I can get back in. If this support line holds, then, I can get in at the pivot or, at the VWAP or wherever I want. I just ameliorated some of my risk right there and some of my stress. So I hear you though. It's two different strategies.
Yeah.
Right now I would be like, all right, if we kind of wick down to the bottom of my rectangle, I'll buy another one. Or we make new lows here, I'll buy another one. So as long as my bias hasn't changed, I can get back in. But you're to your point. That's no, set it and forget it is another strategy that sometimes is pretty good.
Right, right. Now I moved my stop up, right, to break even, but it could be 1 or 2 ticks under, and maybe your
Yeah.
first target offsets a little bit of that stop loss.
Yeah.
Yeah.
Yeah, totally. But the trend line's holding here so far, so good. So good call on that trend channel.
We'll see.
Fly It Here says, I like the quote I heard. If you are looking to stocks for excitement, I should have read that before I was going to say it out loud. I should have read the comment. Have an affair instead. Have an affair instead. It would only cost you half.
Oh no.
Oh my.
Bow
my.
Hunter asked Jim, how many times can you enter?
There's no limit.
Once, Bow Hunter. I think you mean not a trade. I think he means the contest. Yeah,
Oh
just one entry per person.
yeah. Don't game a system. It's going to be hard enough for me and Tom to sort this out and begin with.
Yeah.
But I appreciate your enthusiasm.
Yeah, HP, unfortunately not for Canadians. This contest. We'd love to open it up to everywhere, but it's...
I know. Why? What the heck? Who came up with that part of the rule?
You know what? Canada has different rules for sweepstakes.
Oh, I see.
I think they require a contest to have some sort of question and answer that has a measurable answer. So a lot of times you'll see open to Canadian residents, but you have to answer a math question like 2 times 5 plus 3 or something, something easy.
That's a tough one.
It's 13, by the way.
Okay. Wait, what was it? 2 plus what?
2 times 5 plus 3.
Oh, yeah.
0.0.
6-string Dow. Talk about cumulative delta. Can I recommend any sources? Well, I'll tell you, there are some good sources. Anthony Crudele is a great source. I think he does well. Calvin Harris, we've had on the show. I think his Success Trading. He also does some great stuff with cumulative delta. I don't know if there are any books or any resources in that way. You might look on our NinjaTrader channel and do a search on our YouTube channel, do a search on cumulative delta. We may have had some videos that explain it and how to use it. There, I'm not sure. But Anthony Crudele, Develop Your Edge. He talks about a quit. Scott, yeah, go ahead, drop that in. If you have an idea.
Yeah, maybe we should do a NinjaTrader platform unleashed on cumulative delta, which means I'd have to do a little more research.
Yeah.
So Michael Crump is here, Tom.
Thank you.
Oh, I'm sorry. I'm way late on my scroll. My scroll is like all messed up.
That's the second time you've told me.
My bad.
I thought you were being funny.
No. It appears a lot of times I can get away with it a lot of times. And yeah, I was just joking.
Yeah.
I didn't know what I was talking about. So Tom, today we got Jimmy Jimmy Iuorio coming up next on Let's Talk Futures. Traders Workshop. Who are you with, Traders Workshop?
We've got Thiru Nagappan.
Oh, I love that guy. He's so like professorial. He should be a professor.
Yeah, I mean, he just does a great job of explaining how he came to the markets and what he found and his approach. Very logical and very kind of systematic. So going to that point of what I said earlier, it's easy to get get that adrenaline rush when you're watching a trade ladder and it hits your target.
Yeah.
This is not that. This is about how to control those things, control those emotions with some sort of discipline. So really good.
Yeah. Yeah. And then for the second time, we have Merlin Rothfeld, Merlin the Trader. He's been around a long time. He's awesome too. He's going to be for the midday wrap up. We're just bringing Merlin in and wrapping it up.
Awesome.
Yeah.
And Scott K, I don't know if you heard me, but you can mention one if you want. Anybody can contribute. You know, if you have an idea, feel free, right? Drop it in.
Wait, what are you talking about? What kind of idea?
We were talking about cumulative delta.
Oh, okay.
I think it was Six Ring Dow asked about cumulative delta. And Scott, you don't need my permission. You can just drop it in. Appreciate it, but my
Tom, I toggled.
yeah, go ahead.
Sorry, I just toggled back to the micro Dow just to see what it was doing since we were
I was
talking
just
about
gonna
it.
say
Yeah.
the micro Dow trade not looking so great, but not abandoning it yet.
Well, the commodity channel index is trying to get above minus 100.
Yeah.
I think that would be bullish if it did.
Yeah.
We have a competing point of control right at the bottom of the value area. And then we have this deficit, right? This it's a desert. It's a volume desert.
Ooh, I like that.
Yeah, volume desert right there. So yeah, I'm still on the fence here. I'm still on the fence here. I mean, the CCI could just arc back down again pretty easily.
Yeah.
I mean,
what I see off the opening range low is I see higher lows and I see higher highs, with the exception, of course, this candle that's brewing. It's got 9 minutes left. So it has 9 minutes to take out previous candle's high, which, by the way, is just a couple ticks short of 42,000. And just a little bit further up from that is VWAP. So you got some interesting levels there that might make that a target. But I could also see this. There's a longer term downtrend from before the opening range. So, you know, what's going to win out? There's not a lot of advancement on the cumulative delta. So it's kind of evenly matched, right? Buyers and sellers. I'm going to leave a breakdown trade in there and just realize that this might be a shorter trade. I'm not going to get a lot out of that breakdown.
Well, we're pretty close to the previous session's lows and to the S1 also. So a couple areas of interest right there.
Yeah.
Yeah. I don't know. Things are slowing down. Let's look at the volume. The volume for the front month in the E-mini S&P is kind of light. I mean, if you add both September and December, it's okay, but I wouldn't do that. I'm going to look at the December, 350,000 contracts so far. Again, I think this is going to be a big volume day by the end of the day, but I think all that volume's coming at 2 o'clock, 2 to 3:30.
Yeah.
So that's why I'm not like really enthusiastic about trying to find a whole bunch of good trade ideas today, because it's tough, man. It's a tough anticipation between now and this is the first time that there's going to be a rate cut. We're pretty certain there's going to be a rate cut since March of 2020.
Yep.
So that's longer than you think.
Seems forever ago, right?
That's 4.5 years ago.
That's right.
Right. I was a young man back then. you know, so and it was the last one. It was a 50% cut, I think, also. 50 basis point cut. Sorry.
Sylvan Optiker is here. Welcome, Sylvan. That might be the first time I've seen Sylvan's name here. So thanks for coming.
Yeah, thanks for being here, Sylvan. Appreciate you for sure. In any event, let's move off the Dow. We're just kind of like, I'm rooting for you. That's all I'm going to say. Let's go to crude. Crude is looking. Oh, I love this chart. I'm going to go to micro crude. Remember, we have that 1030 number here, so we really can't jump in front of it. but because it's the Energy Information Administration's inventory numbers, which is a big deal. It's a weekly number that's coming out at 10:30 by the Energy Information Administration, which is a division or a part of the Department of Energy somehow, some way. I don't know how the org chart works, but they have really great data, really great website, EIA.gov. You can get lost in that website for, for days and days. There's so much good data there. But we're having a really nice retracement, and we're getting close to that VWAP touch here, Tom.
Yeah, I think this can. I think a quick trade before 10:30 could be possibility. And when I say quick, I'm talking it's almost like scalping, right? You're not going to be in it very long, couple minutes maybe. Try to get back down to that VWAP is my thinking, because you're still in an uptrend, right? This could just be a pullback in an uptrend, that V-shape recovery that you mentioned. Interesting, it got up to yesterday's close and then just turned right around.
Yeah. No, I know. I'm jonesing to, is that a word? I'm jonesing to hit the buy button, but I'm not going to do it because the number's coming out, right? It's not best practices. 5 minutes before a number is not my thing.
Not your jam,
Not my,
as the kids say.
not my jam. Is it? Yeah, the kids from 1980, maybe. I mean, what kids are saying that?
Oh, I heard it all the time when I was at a bigger corporation. We were still, sitting next to people at desks, right?
So were you like, would you come to this meeting and then you would say, no, it's not my jam?
No, but the kids would. When I say kids, I mean kids out of college. or few years removed from college. That's my idea of kids.
So when you know who in the marketing department schedules another meeting,
Yes.
another meeting, I might be like, yeah, it's not my jam.
Not my jam.
Oh my god.
I'll give you a quarter if you say that.
All right. Carlos, I'll take it. Carlos, New York Yankees is in the house. Carlos, how you been? His comment was, I've been trading the corrective structure levels of the majors in anticipation of today's events. So that's brave. I mean, I'm assuming you're talking about the major currency pairs. And they're going to be just as volatile as anything when the storm comes at 2 o'clock, or if you go by Jamie Dimon's point of view, there's not going to be a storm. It's going to be fine. But yeah, currency pairs are going to be in motion for sure. I mean, everybody's cutting, right? Here, Tom, I have a website I'm going to pull up because I was looking at this morning.
All right.
Everyone's cutting except Japan. So, and actually, I'm going to cut and paste this into the chat if you guys want to check it out. It's kind of handy. It's kind of fun. So this kind of shows you the major central banks on the left-hand column, and then obviously what country they represent. They're pretty self-explanatory. Their current, core overnight lending rate, the direction they've been going, and their previous, and then the last time they changed. So it's pretty handy. This is a pretty handy little page. And so if you go to, if you're trading the Canadian dollar, let's see where they're at. Right, they were at 4.5%. They cut on September 4th, and now they're at 4.25%. Now this is probably for the Fed funds. It's a range, so they're just picking one end of the range, but it's kind of helpful. It just shows you what the trend is of these different countries.
Yeah, really interesting site. I like that.
Yeah,
you can sort by rates, right? You can do a sort.
I
wonder if you could.
No.
Okay.
Not quite that sophisticated, Tom.
All right.
But I have it saved as a bookmark, and I have it. I'd like to look at this. It kind of reminds me, because currency trading is so, I think it's the most underrated CME Group futures market there is. It's a great market, centralized exchange. You got, there's all of these restrictions that you don't have. And then, the data feeds, the data is the data, right? It's coming in. Participants are choosing the data. Yeah, there's some market makers in there, but there's not a central exchange of who knows who giving you a bid-ask spread that you might not like. So there's many more benefits here, but we don't have time to go into it. Oh boy.
I got
In any
stopped
event-
out on my gold trade, by the way.
Oh, did you? Let's go
Yeah.
back there.
Break even.
All right. Let's check it out. Yeah, I'm not keen to place a bunch of trades until it's time. After 3 o'clock. Yeah, so the trend line failed. The trend line
so far.
failed.
Yeah.
Yeah.
We'll see if it remains below the trend line.
Yeah, I don't like this, Tom. It looks again though, it's I don't know. I'm going to draw another rectangle. I know this is kind of, it looks like we're literally into the weeds with the way these candles look, but pre-market from, the European Open until we had liftoff at 6 o'clock, this was kind of nice support.
Yeah.
25.94.7. We just wicked to it again. So I should have drawn that rectangle earlier, Tom. I didn't see it. All right. I think it's a wrap time. I think we got to get Jimmy in here. I think Jimmy Iuorio is up next with me.
Yeah, I can't wait to hear what he has to say.
Oh, I know. It's gonna be awesome. So let's go ahead and take a really quick break. We'll get Jimmy in here. We'll be right back.
Awesome.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
We are back. Let's talk futures. Joining me live, one of my favorite guests, Jimmy Iuorio. Jimmy, how are you?
Good. Good to see you, Jim.
Man, I'm glad you're here today. It's, I am like overwhelmed with both sides of the aisle talking about 50 versus 25 today. I'm about to give up. I don't know what's going to happen.
Paul Krugman just chimed in from the New York Times where he thinks you should go 200 to 300, do it right away. Elizabeth Warren wrote the letter saying 75 basis points right away. This to me is an amazing time for you to be overwhelmed, like you said. I think is the perfectly appropriate response. Now, there's one thing I want to add is that the Fed really loves to be this transparent entity that leads the market to the trough, right up to to know exactly what they're going to do. They were not successful at this time. One of the reasons might be because they've been pushing to lower rates since that speech a long time ago from Powell, where he said, they still planned on cutting rates 3 times, despite the fact that their inflation expectations had increased. This is going back about a year. The Fed has wanted to take rates off what they consider above the neutral rate, but the data isn't really representing that. So either the Fed doesn't believe the data, or the Fed thinks that the neutral rate is somewhat lower than it is, and this isn't like addressing any sort of recession. But either way, this is as binary as it gets in this thing. And by the way, anyone who uses technical analysis like we all do, technical analysis isn't just voodoo, isn't just lines on a chart. Like if you look at the S&P right here, the S&P is reflecting that very same ambiguity that's in this release. Now we're 4 hours ahead of the release, and the Fed funds still say 60% chance of 50 basis points, 40% chance of 25. This to me is a failure by the Fed to lead the market. And either way things go, someone's going to be caught off sides.
It kind of reminds me of the old days, right? In the old days, there was no Fed speakers, there was no anything. You would if you had a TV around, you would have a little thing that says Fed imminent. Remember that? It would say FOMC imminent. You would have no idea. And so it would come out, and there's no Fed tool or anything like that. And, either you were right or wrong. It kind of reminds me of the golden era when that was the case.
Yeah, but it's getting my hand shaking again, like back in those days too. So it actually is an event. It's not a non-event anymore.
Yeah, no, I hear you. It is for sure. So I will find out. We'll see what happens here. And there's a lot of if then scenarios around Fed thinking. So as an example, if they go, if they go 25% or 25 basis points, it gives them some cover, as opposed to going 50 and being too quick. And so they could always go 50 the next meeting. There's that kind of logic that's floating around both ways.
Sure. Yeah. So they could, if they go 50 today, they could easily say, we want to front load this. And perhaps they can take some of the future eases out of the market just with words, which by the way, is really underscores how stupid the whole transparency thing is, because they're really never giving their 100% honest viewpoint. They're giving a viewpoint that is trying to lead the market in certain ways. To me, it actually takes away all the punch from it. But anyway, that's what I think they'll probably do. That's where my money is 50 basis point ease, then talk the market down for saying this isn't a panic. We're just above the neutral rate, and try to take some of the future eases out. Because as of yesterday, we were pricing in 250 points of easing by like September of next year. That's a lot of easing. And that suggests serious economic problems that, frankly, I see them in the labor market, but it doesn't seem like any other analysts agree with me. So it's an odd thing that they're doing.
Well, it's even odder when you look at GDP now is at 3.0. New York Fed cast is like 2.6. These are not recessionary forecasts.
No, not in the least. And today's numbers came out with was a housing starts, building permits, all beat substantially the upside. Yesterday, retail sales beat substantially the upside. I think they're going to go 50, like I said, but I think, Jay Powell is going to pretend he's confident that it's the right move, but I think he's in a nasty pickle. Can we talk about this chart? Because I love this chart.
Yeah, let's pull up the mini chart, Mission Control, if you get a second. This is just a candle chart, daily candle. That's all it is. With Mike Arnold's lines.
Perfect.
Got it.
So what happened yesterday was pretty amazing, and it really underscored how huge a level this is with that overhanging resistance level. We popped up into the box, rejected it soundly, just to underscore the ambiguity that the fundamental picture is giving us as well. So is the technical picture. But now what this is telling us is now it's going to pick a direction. We like to look at settlement prices settling maybe a 60-minute bar or a daily bar. I want to see a daily bar settle above that box. I would call it what, 57.40 is the upper end of that box?
The upper end of the box is, yeah, about 57.40, 57.42. Yeah.
57. So a settlement above there on a daily basis. And the reason we say settlement is that imagine, and this is, I know you know this is for the people watching. Imagine what's going to happen when the release comes out today. There is going to be two-way noise. There is going to be potentially some wild volatility in some of these markets. And we could easily get prints above there. Those don't concern me. Those don't excite me. I would love to see a daily settlement there, perhaps even tomorrow a trade above it to get it going. And then I think that'll green light the move higher, which, by the way, there is no guarantee that happens. This is about as neutral looking a chart as I've seen in a while. We stalled right at critical overhead resistance. And right now we're looking for a direction. That direction can be either way, but the roadmap's pretty clear. If it settles above there, I think the direction's up. All it has to do is break those two previous lower wicks, in my opinion, and I think direction's down.
Okay.
Yeah.
I hear you. Yeah. No, I agree that this is definitely a pause. This is definitely, we got to wait to see what happens here before.
And that's even
further.
in whole candlestick charting method. When you see, what is the one where there's just a thin candle in the middle of two long wicks?
The doji.
Right. That suggests a lack of commitment. And that should be what the market's telling us right now, because we can go in vastly different directions based on the results of this meeting.
Well, all right, let me throw this out at you. So
sure.
CME just recently introduced this equal weight futures for the S&P 500. It's brand new. It's not tradable yet, right? There's no volume in it, but it gives us a number, right? So I have equal weight futures up again, and it's another all-time high for equal weight futures for the S&P 500. Not different calculation, but It's looking at all 500 on an equal basis. Does that tell us anything?
I think it does. But right now it's still in the beta stages of where I'm going to fit it in, because I like to look at the most traded, the most opinions being thrown in on something. And that the regular weighting S&P 500 is still, the bell cow in that arena. So this tells me more. I think it's very, very interesting to me because it does show how top heavy things were, and then how they corrected a little bit, that the equal weighted has already moved on to new highs. I think that's very interesting, but I'm just keeping it in the interesting phase. What are your opinion on that? Do you think it's important?
Well, the way I think of it, and I don't know if this is right thinking or not, because it is a brand new thing for me, but when the equal weight is stronger than the regular E-mini S&P, it's suggesting that the big seven, what do you call them? The big seven are magnificent seven aren't as strong as they should be. And then I look at the NASDAQ to look for places to get short.
Yeah, but right. And that's interesting too. And I was about to say, and then you look at the Russell and look for places to get long, which is the exact opposite side of that trade. And I think that's good trade. And that's one of the things I've been talking about for the last month, is I think that could be a big thesis over the next 2 quarters, is out of the NASDAQ, particularly the Mag 7, into the broader Russell. Now that depends on what candidate wins too. And I don't want to mention any names. I don't care about politics, but I do care about policy. But the market seems to view one candidate as more friendly to smaller companies, broad market, and the other candidate as more friendly to bigger companies.
Yeah, no, I hear you. Tom has got a good thesis too on the Russell. I just pulled up a Russell chart here. And the Russell has more to gain because they're small cap stocks, right? They rely on borrowing probably a little more. Their CapEx isn't as big as the big dogs. And so they're more sensitive to these these macro interest rate numbers. And so, and I kind of agree with Tom that this has the most upside from a percentage point of view as we continue to cut, if they continue to cut rates.
Yeah, well, there is something that's funny too, is that historically we believe that the tech sector loved low rates too because of that discounted future cash flow, a metric that all these Wall Street analysts use. So that was the thing a couple of years ago, like, oh yeah, the low rates, the techs love that most, growth stocks love that the most. But now we're switching the narrative, which I think that the switch narrative is true as well, because the Russell probably likes them more. 3 times as many of the companies in the Russell use floating debt than those outside the Russell. So they are very, very dependent on lower rates. And again, one of the things that people miss though is I think there's a market position element of it. I think for a year, maybe even 18 months, people were buying the Mag 7 against a short in the Russell. Those positions still exist, and when they start to head to the exits, it could exacerbate the move. But this Russell, the same, nobody's going to be surprised when I'm about to say. I need a daily sentiment above that box to think that the game is on. But when I get that, it's going to be a pretty strong signal, particularly if the next bar, the next day, goes higher than that high.
Yeah, you're one of the few guys that, and I respect this. It's Larry Williams is another one. It's like when we get a settlement above this box, I'm getting long, right? That's the idea. And people will look at that and say, well, you're getting long at why don't you get long now? Right. And what do or on a retracement, right? And so it's a different thinking, but what you're saying is, hey, this market has proven it's strong and it's going to continue.
Right. And it's so counterintuitive to a lot of people to say, I want to get long, but at a higher price than it is. But I always explain it as that I want the crowd, at least part of the crowd, to start flocking to this trade. And I want to be about, if I miss 10% of the move, that's fine. But I think that's where the level that more people will be following into the trade. But it's a great question because people ask that all the time.
Yeah. And you got confirmation that the trend's going to continue. Yeah.
Yeah. And that's what I think is going to happen. I would like, and I'm mildly short the NASDAQ against long the Russell, but not even enough to call it a real trade yet, but I may get that on.
All right. It's you're dipping your toe in the water.
Dipping a toe, the pinky toe.
Yeah. All right. So that's kind of the story of the stock index futures. There's been a lot of discussion on Bloomberg, Reuters, all the usual places, CNBC, about now is the time to jump into treasuries. What do you think? How do you feel about that?
I don't. I actually was short the yield until yesterday, and now I'm somewhat long the 10-year yield for a bounce back up to like 375. Here's what I think. I think, I got right in that yesterday at the end of the day. I got stopped out of my shorts into longs, which are working out so far. I don't know that these are long yields, by the way, right?
Yep.
This is yield. This is not the TY. So I think a pop back up to that. What is that level? Some green candles on the top of that slope a little bit ago. I can't see. I wish.
It's right up here, Bob.
Right there.
Yeah. So that's 3.83.
So that's my target right now on this move. And by the way, for 2025, I think one of the themes is longer end rates going higher. And I think it's going to be a function of the increased amount of debt the Treasury is going to have to sell, particularly in the long end, because they've exhausted many of their short end available options. And again, some of these long-term auctions have gone fine over the last 6 months, but enough of them have gone poorly to make me think that the demand out there isn't quite what we think. By the way, Steph Pomboy has come out with an interesting thing, and this is going down a rabbit hole, I apologize, about a policy for Trump to allow domestic holders of Treasury bonds to be tax exempt. And there is some traction to this. We're doing a show on it at the end of the week, but that could change things. But in absence of that, I think that long end rates could go higher.
So that's interesting too, because state municipal bonds, those are tax free at the federal level.
Yep.
Right. So it's not like it hasn't been done before. It's a similar.
If they're worried about, and President Trump, President Harris, doesn't matter. If you are worried about the foreign entities, one, holding too many of our bonds, which used to be a problem, but a lot of them have divested, but not enough demand globally in these auctions. If you throw that in there, there will be the demand, and it could help finance your government and anything that cuts taxes. I like, as you know.
pro tax cut guy. All right, I'll put that. Yeah, I didn't know that one. Anyway, all right. So that's a good answer, and the idea that Fed funds is going to be correlated in some fashion to the longer end of the yield curve might be true, but that correlation might be weaker, right?
Yeah. So I think the way it's always seemed to me, and you're a bond guy too from forever, when the Fed goes from neutral to either easing or hiking, this time we're going from neutral to easing, it's usually both both things move in the same direction. It's not like, the 10-year yields are going to go lower too. They're just going to go lower, slower than the 2-year yields have. And we've seen that. We've seen the curve steepen out and go positive again too. But as we get used to the new pattern, whatever it is, I do think rates could move in opposite directions, where low end yields could stay low and high end yields could go much, much higher.
Yeah. All right. That's interesting. Yeah. And I was amused when you use the ticker symbol TY.
Oh, right. Okay.
Right. We're aging ourselves, right? There's
exactly.
Yeah. They added a Z in front of all these. Remember the night bonds? Were you around for night bonds?
I used to have to work the night bonds sometimes too. And one time I fell asleep because we didn't really have any customers who traded the night bonds. And one time I fell asleep for like 2 hours on the trading floor because no phones were ringing, but I hated working night bonds.
Yeah. My brother actually was in that pit for a while. So I don't know if you know Chris Cagnina, but you probably don't. But I don't know if he was there when you were there, but he was in that as well for a little while. It's kind of it was like the training pit for new traders.
Yeah, no doubt about it. And I only worked it like once every 2 weeks. And I ran a group and had guys working for me. I only did it myself because I didn't want to be accused of someone who just made everyone else do the dirty work. But if I had to do it over again, I would have just made everyone else do the dirty work.
I'm going home. It's too late.
Yeah, I'm going home. See you guys. Call me.
Oh my goodness. All right. So what else do we need to talk about here? We currency pairs, of course. Oh, you want to talk about gold? Let's go to gold. Let's go to gold. Yeah, for sure. That's a great one.
Okay.
All right. So it's a little more messy, my gold chart here, but we had this long period of consolidation.
Yep.
And when I saw this breakout right away, I'm thinking, all right, Jimmy's getting long here. When I saw this breakout above the consolidation, and then another kind of decent move up, this was a big 2-day move. I was thinking the gold is anticipating a 50 basis point cut.
That's what I think too, which is funny. Now I look at this chart and I like the move above that box. And if I wasn't as long as I was, because I am quite long, I would have joined on that for the short-term trade. But once it stopped at that upper box, that red candle to me means now I believe it has to go back down, test the breakout level, trade into that middle box. I don't think that low. I think just trade into that middle box, perhaps below it a little bit to stop some people out. And then if it builds a rounding pattern and starts heading higher again, I think that's the big move that brings us to what my target is, 20 and under. So right now, I would be trading it from the short side, particularly for these next 4 hours, as everybody who's been bulled up on it thinks, wait a second, where are our risks? Oh yeah, guess where your risks are? They go 25. Gold probably loses a quick $30, I'd say, wouldn't you?
Yeah, but I remember, so a long time ago, I befriended this guy named Jack Burrows. Do you know Jack Burrows? He was in the bond pit too. He was in a couple.
I know the name for sure. Yeah.
Yeah. So his website was like Bros on Bonds or something. He was a great guy.
Right.
He was a character. But he told me, he goes, hey, go back in time, pick a point in time where you see an area of resistance or area of support. So I see this rectangle here as an area of resistance, and I drag it across the breakthrough. And Jack says, this is most likely going to be the area of support. It was resistance. Now it's support. You drag that rectangle over and then consider that. So when I'm considering that, I'm thinking, well, maybe we're going to be range bound again, sideways, again, until the next rate cut.
Yeah, it could easily be, because that is going to be strong support. And that's one of the reasons I think the market, if it starts to head back to test it, may break it for, to have a cup of coffee just to see who will blink and be stopped out. So, yeah, but I think the sideways move is again, gold has been a fabulous asset over the last year and a half. Very few drawdowns. And we've have these long consolidation periods where everything else corrects, but gold stays firm. So that could easily be too. Can we go down to a 60-minute chart? Because I want to see where I might. Because again, if I'm shorting it, and this is important, I am core long gold, and shorting it would just be to trade around my core position.
Got it.
So I need
when you do that, when you trade around your core position though, do you ever end up flat temporarily or no?
No, I usually just use options to trade on. My core position is in the contracts, and I use options. That I think that the wick from that candle from just an hour ago, that's a good spot to short it afterwards. If I believe that it is going back to test that range. Which, by the way, the fact that the clock is ticking, we're coming ever closer to the binary event, the biggest binary event in years. I probably will back off some of these trades and just try to hedge risk going into it. But if this was a normal day, I'd probably sell it below the that wick if it goes there a second time, because it did once already, obviously.
Yeah. And so out of curiosity, so for your day trades, do you rely on 60-minute charts?
Yeah, 60-minute. I start looking at the daily early, but then I forget that and go to have a 60-minute up and a 10-minute up to look for the best entry points.
Got it. All right, cool. All right, very awesome. Yeah, so we'll see how we'll keep monitoring that as well.
Oh, by the way, long term, I want to add to long term. If I had to pick one asset, it's gold. And most of that is a spending like drunken sailors government thing that's happening here. We are going to have $1.4 trillion of just debt service in 2025. And we only collect taxes of like $4.5 trillion. So this is a tremendous amount of devaluing the dollar that they may have to do in the next few years to make up for this profligate spending.
Yeah, no, it's interesting. I have Blue Putnam coming on Friday. I'm going to ask him that very question.
Good, please do. I'll watch. Yeah.
Yeah. So, all right. So I do want to toggle over to crude, because this has been, we're in November, by the way, right now, right? Yeah. So we're in November crude. I'll get a daily chart up here in a second. 60 handle, 60 something handle. What the heck?
So I think crude and copper were both reflecting weakness in China more than anything. And I think they were reflecting a potential slowdown here as well, particularly crude. And I think now what crude's telling us here is that that we may have overestimated China's demise, and that rate cuts are coming that could potentially fuel the economy. I don't think this is anything yet. If you drew that box in, I actually think we're getting into a spot to sell crude. I'm not ready to sell it yet. I think technically speaking, okay, great. It comes up and it challenges this again. If there's any sort of rollover pattern at all, this is where I may even go to a 60-minute right now, and then maybe even a 10-minute to look where the rollover could happen at this level for a potential short. Okay, so we see it.
I'll get the 60 going.
Yeah, so here's the 60. So those two low candles, the red and the green one from about 5 candles ago, below those wicks, and I think it heads back lower still. But again, I'm not ready for it yet. I think it's going, to me, that looks like a negative chart, but the trade doesn't happen until it can settle a bar below those levels.
Okay. Yeah, I think and I haven't looked at the data, but the EIA numbers, I think, came in already. The API numbers last night were a little odd. They weren't jiving between Cushing and the general crude numbers. Right. So I'll when we have time, I'll take a peek at that.
Can we do a favor, because we have only a couple minutes left, because you mentioned crude, and copper and crude have been kind of trading similarly. Can we look at a longer-term copper? Because I think it could be on the verge of a major medium and long-term breakout. Can we go to a daily?
All right. By the way, on copper, I have like a sample sim portfolio I'm building. Yep. And I've been long copper for a few days now.
Okay. Yes, that's a beautiful trade. I'm long copper for a few years. In an investment account was my big thing. But anyway, so you see that bar above it right there, the bar on the upside, a settlement above there. I think green lights this move higher. I think copper has been taking a lot of punches over the last year, and it's time for us to go again. Because then the fundamental narrative can switch so easily from, oh yeah, China's weak, to, oh yeah, we're going to electrify the hell out of everything, so we need copper as a conductor. So we can change that narrative quickly. So all that I care about is the technicals, settle above that, and then some strength beyond it. And I actually may increase my copper longs for the first time in quite a while, just because I have quite a few on.
Yeah. So do you think, all right, so, we mentioned, the GDP nowcasts earlier. When I see numbers that strong, and forget about China for a second, I see numbers that strong, PMI numbers aren't that bad. No. It tells me that, we're going to need these ingredients to to make the cake.
And what if we are now easing into a re-accelerating economy, which, by the way, is not my base case, but that's what the technicals, if we settle above there and have some strength, that's what it'll seem like the copper market believes. And it's certainly a viable possibility. That's one of the reasons we only rely on fundamental analysis for a small portion of our trading. Technical analysis is much more where the money's made, in my opinion.
Oh, yeah, I know. And by the way, I've adopted and I credit you when I can, I've adopted your saying technical analysis is not voodoo.
It's not voodoo. Okay, good. I like it.
I use it all the time, but I give you credit for it, but I use that all the time.
Thank you. Yeah.
Anyway. All right. Let's really quickly here before we tell people how to find you. Let's go to the Bitcoin. I call it the Bitcoin. I like to put the in front.
I like the Bitcoin.
What's going on here, man?
Okay, so you see where that top wick of that bar from yesterday hit right at that trend line. Notice it.
Yeah.
I think a settlement above that line is good, but I still say the ultimate settlement is above 70, and that releases it for forever. So imagine. So one of the things, if the one candidate from the Republican side wins, and he's a big fan of Bitcoin, at least he says so. Perhaps he's saying it just to get votes. And all of a sudden, the Treasury decides that they might want to be owning Bitcoin. This could be a tremendous fundamental tailwind for the coin. Conversely, if the other candidate wins, they have not expressed any sort of love of the coin. But I think from a technical standpoint, a settle above that top wick. What is that top wick? About 65-ish?
Way up here or this one right here?
No, the one right next to it. Yeah, that one.
Yeah, no, it's only 61,640.
Okay, so let's call it.
And this one up here is like 66, almost 66.
Oh, that's the one I'm sorry. That's the one I identified yesterday as where I want to be long in my medium and long term if it settles above there. So scratch what I just said. That's the line I like.
And I'm going to say this just to rally up a little bit, but if the Treasury starts holding Bitcoin, I'm joining Bruce Springsteen. We're moving to Europe.
To Europe, you're going to place in Italy, right?
Yeah. Anyway, so thanks for being here with us. We are up against time. What's the best way to find you? I know you're really active in a bunch of different places.
So at Jim Iuorio on Twitter, that's JIMIUORIO. But also please join us on the Futures Edge podcast and the Trader's Edge podcast. Well, the Futures Edge podcast is the one that you guys will like the most. It's going to be tailored for you guys. You're going to love it. Thanks.
Yeah, no, I'm following all that stuff, Jimmy. Thanks for being with us. Looking forward to our next conversation. Coming up next, Tom Schneider, Traders Workshop, Thiru Nagappan. We haven't seen Thiru in a while. I can't wait to get this guy back on. So hang tight. We'll be right back.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers, building trading indicators, and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit ninjatrader.com to get started today.
Well, welcome back to NinjaTrader Live. I'll be your host for this segment. I'm Tom Schneider, CMT with NinjaTrader, and this segment is Traders Workshop, where we like to bring in our NinjaTrader ecosystem partners so that they can share their expertise with you today. It's great to have back on the show Thiru Nagappan. How you doing, Thiru?
Hey, Tom, always great to come back over here. Always enjoy our conversations and chart analysis and sharing with your audience. Yeah, really great to be back.
Yeah, good to see you. And it's a little bit sad we couldn't get together this summer, but it just, things change and we will get together. I know that'll happen. But how was your summer? We haven't seen you in a little bit.
Yeah, as I said, it's been a very busy summer.
Good.
We've had quite a lot of things going on. As I said, we went to one of these adventure activities for the kids and everything. So that was really great fun. It was about 50 of us. And then we also had a busy September. We just had Tom Basso. We interviewed Tom Basso. The market visit was interviewed by Jack Schwager. It's on our channel as well, youtube.com/master the markets. So that was really good. I mean, it's amazing when you hang around such like-minded traders and see what they've done. I mean, yeah, so it's really a lot you can learn from them.
That's great. I just found out about it, so I'm going to check that out when we're done with the live stream. I'm sure that was a great conversation. But it's great to talk to you. One thing I love about doing the segment is I learn from our NinjaTrader ecosystem partners, because everyone has their own history, everyone has their own take on the markets and what they've learned. And it's what I find, what you did, and we've had you on several times, and you've explained kind of the journey, right? The how you came into the markets and what you found, and how you applied your own analysis and your own view of the markets and turned it into a viable business that helps other traders. So, that's what, to me, what is so great about doing these segments, is because people like you, just expand the knowledge. So I really like your approach to the markets. I'm wondering if you could kind of maybe go over a little bit that, give a little recap of how you got into the markets and what your approach is.
Yeah, just a quick recap. I mean, after our epic interview, I'll mention it again, of 25,000 views that we did. I really love it. That we had. I'll show that a bit later on that people can revisit. But for those of them joining new, just a little bit recap. I started off as a cardiovascular pharmacologist, totally different sector, and then turn of events. Got into trading, wanted to make money work for me. I didn't want to be in the rat race forever. But I applied all the research analytics that we used to do in the science labs in pharmacology back onto the markets. So I got very fascinated by the markets, worked on a trading floor for a bit, for 2 years, left that. Then we set up Master the Markets in 2010. It's been a long time now, over 14 years we've been doing this with the company. Something unique about us, we always thought right from the beginning, is we just don't want to be reporters, just people who just share training knowledge. We want to be traders first, and then we want to teach people. So we built the company all based on that kind of philosophy, where we research the markets, then we apply it on the trading front first, see what works. Then we share it on the educational front, which is Master the Markets. So that's just quite a little bit of an overview. And most of our learning, actually, Tom, as we have talked about in our previous 4 interviews and webinars, is that it's mainly quant-based. We were taught by quants, institutional quants. And that's how we look at the markets. And the good part, which I liked when they taught me that, it was very systematic, very methodological, and not only was rigid, it can be applied to any other strategy or any other kind of way that you're looking at the markets, because it's mapping the exact nature in which markets move, which is cycles.
Yeah, and that approach, right? The methodical approach is what I really find appealing, right? If you're a numbers person like I am, if you're analytical, if you like to solve problems, or you just are interested in how things behave, this is it. This is you took kind of a like you said, a quantum view at this, right? Quantitative analysis. I say quantum, it's really quantitative analysis. But you took this higher level approach to kind of identify and see what those patterns are. And the cycles, the patterns, it's all kind of the same thing. It's human behavior evidencing itself in the price, right? And so how can we dissect that? How can we see these patterns? That's what I love about this approach.
Absolutely. And you know what? I think I'll show that on the charts. And then, like you said, we will do like a recap as well. And then we'll go through some of the main core concepts. So perhaps I'll start off with, I know gold is a lot on topic right now.
Yep.
And I can show that also on crude and the 6P, the GBP USD. I think before, just a little bit of reference, I think I had some of the videos. So these are some of the things that the viewers can watch. The epic one that we did, Tom, I never forget it. The first one, 25,000 views, and then with Jim was 13,000. So they all can catch that at their own time, and also on our channel, youtube.com/master the markets. Highly recommend you guys to watch the interview by Tom Basso, right? So with that said, let's go on to today to give them a reference point to go in detail. Let me just bring up this. Let me increase this one here. That's great. So here I am on the gold contract futures for December. So the first thing what we usually will do is we look at the trend and the phase, right? So in here, you can see that's been quantified for you. So that's an uptrend over here. And then the phase, I mean, I had a question early on today when I had a session is, how do you actually define the phase? There's only two types of phases when there's a trend. It's either a phase 1 or a phase 2. In this case, it's a phase 1. So let me explain this. Now, whatever we usually teach, Tom, which we have talked about in our previous interviews, is that it's cross-transferable. It's not a rigid kind of a structure. It can be applied to any kind of instrument, time frame, strategy, or whatsoever. So because it's following the nature of markets, we all agree, right? I mean, everybody watching this or watching the recording or traded before you, they all will agree that price never moves in a straight line, right? It never does. I mean, if it did, we all be billionaires today, right? Getting anywhere and we just keep going in a straight line. So that's the first thing. So if it doesn't move in a straight line, I mean, this doesn't matter whether it's crypto, whether it's gold, whether it's commodity, whether it's currency, doesn't matter. It will never move in a straight line. If it does not move in a straight line, principle number 2 is that it will move in cycles. If it moves in cycles, then you and I know that inevitably principle number 3 happens, which is it will form some tops and bottoms, right? Or turning points. You can call them turning points, whatever you want to call them. But they will either be a top or a bottom. Now, because of that turning points, inevitably what happens is that in the market, how the quants then compress it. This is the unique thing about quants. They like to compress it into 2 levels of looking at it or 3 levels of looking at it. So what they did is that they said, okay, if the tops and bottoms are formed, if that's the way that markets move in cycles, then tops or bottoms are formed. Then if tops or bottoms are formed, then there's only 2 types of moves that can happen in the market at any point of time, which is principle number 4, which is it can only either be a bottom to top move or a top to bottom move. Right? Once you have done number 1, which is quantify what a top and bottom is, this is what we call the structure, the market structure. So this is what then they realized. So then they went on to then say, okay, if there's only two types of moves, bottom to top, okay, let me find out how much distance is there in a bottom to top or top to bottom. And let me get that all into a data and then arrange it in a probability table so that whenever I enter, I will know how much move is left, which is also known as open equity. Now, before I go into that a bit more deeper, I'll just come back into uptrend phase ones first, into market structure, then we can go on to the second part. So in terms of the bottom to top or top to bottom, once I've defined the trend, I mean, the trend, as we all know, is that most people know the definition, right? So it's a higher high. And then if this makes a higher low as well in relation to this reference low, then it becomes an uptrend. Now, what is the phase one, Malaki, then about? So the phase one is about, right? So it's when it's in alignment with the trend, right? So in this case, the bottom to top is going up and it's the same direction as the uptrend. So that's called uptrend phase one. Now, when it then comes against you, you can call that counter trend or retracement, profit taking, whatever you want to call it. In that counter trend move, because it's going against the trend, then it's phase two. Right? So at the moment in gold, as we can see with this quantified structure, what we got, market structure, is that we got the bottom confirmation of the blue arrow and the blue dot, where this bar confirmed that bottom with the formulas that we've identified. Then you can then see that at this point, it confirmed its direction with the trend. So it's a phase one at the moment. Okay, but when this, let's say, if this selling continues, right? So this, if you observe, and everybody listening in as well, if they observe, you see, this is the exact specific scenario that can happen in any time frame, right? Which is, okay, you are in a nice upward move, phase one, all good, Thiru, right? Oh my God, this is happening now, right? Your profit is diminishing, right? Unless you haven't exited, this is all still open profit. It's unrealized, right? So the real question for a trader when we are in the position is, if I were to draw the point of entry, so the quant traders always thought about in this way, okay, where did you enter? So that's your point of entry, right? So where I've drawn the line there, your point of entry. So when this happens, okay, your open profit was up to here. The maximum open profit was up to there. Let's call it maybe $1,500, right? Now the selling is happening, isn't it? Now, when the selling is happening, that diminishes, right? It's coming more and more near to your entry point, right? To 0 point. So around here, let's call it maybe now you're halfway down, maybe 750, right? Now, the question in everybody's mind will be, oh, hang on a minute. Is it going to go further down, right? And going to go below my point of entry, which is crazy. And then I'll start to see red numbers, which is still unrealized, by the way, until you get out, or until it hits your stop loss, initial stop loss. Or is it going to reverse back and then take that out and then carry on with its phase one move? So there's really two questions really here then, if you really understand market structure and all of this, is this selling at the moment that we are seeing where the open profit is diminishing, is it going to go further down and confirm the top according to our market structure? Because this is the only two things the market can do, right? Either make a top, right, and confirm a phase two in this example, or it can continue further in its current direction of bottom to top, which is a phase one, and shoot up further. You see, the crazy thing is, whatever analysis that you're doing and whatever that you have learned from everywhere online, from the books, only comes down to answering these two questions. If you're using volume, if you're using stochastic, if you're using RSI, order flow, whatever it is, it comes down to this, right? Is that phase one move going to carry on further past that red bar selling, right? And continue on with its phase one, or is it going to go further down and become a phase two? So that's all it comes down to. So that's what I would say the first part is. With the market structure, you can get the phase ones or phase two.
Okay, so a couple things. all great explanations, of course, and the wave nature of the market's really well explained. The one way I think of phase one, phase two is kind of advance and correction, right? If you were talking Elliott wave theory, they have a definite, like, a lot more rules than that, but
Correct.
or more than just a definition of an advance, right? They have advancing waves, corrective waves. Phase one is the advance. It continues in the trend. This could be on the downside too, just for clarification. You could be in a downtrend, and that phase one phase would extend that trend further, is kind of the thought, right? Because you're continuing in that trend.
Spot on. And I think, yeah.
And the corrective wave or the corrective trend doesn't extend back. It doesn't kind of reverse the trend. So a corrective wave here, if we're thinking that this is going to go into phase two mode,
Correct.
well, it could still go down to, let's say, your trailing dots, your
Yes.
A support line that you might have, and still be in an uptrend. And at some point that uptrend might be disqualified if we extend past, let's say, another level. I don't want to get too ahead of what you might say. But the other thing I wanted to say, Thiru, is with this, because we look at different tools together, right? We want confirmation. We don't want to look at things in a vacuum. And certainly this is complex, right? It's not a simple indicator. So I'm not saying that you couldn't look at this alone. But what I see as a technician is I see kind of a flag pattern happening right now, right? You've got this flagpole that's straight up almost in 2 bars. And then you've got that lower set of highs and higher set of lows, right? So in my mind, I'm thinking this is an extension. This is a continuation pattern. Could that help, if we get, maybe a pullback in the RSI, but it's still not below 70, whatever it is, you could combine this with other indicators that as a trader, you might have felt more secure, and you can see what's, what your analysis about a wave pattern jives with what other indicators you might use yourself.
I mean, absolutely, that's right. So, the thing is, I mean, is it going to carry on further and all of that? That's what it comes down to, really, isn't it, Tom? I mean, all the analysis, right? From here, is it going to come out of that flag pattern? Is it going to go further up and continue in its phase one? Or is it going to confirm a phase two? And then at some point, when you get another signal, then is it going to still maintain its trend and go up in the phase one? So to answer all of that, what the quant traders then also did, and this is where the selection comes in, which one of those ones are going to be the big runners, and that's when we use other indicators. And that's when this thing is not a rigid framework. It becomes very flexible to be used in conjunction with any other indicator or strategy, right? But the first part I just wanted to drive to the viewers is always know what trend you're in and what phase you're in. And that can be confirmed to you with market structure, okay, which is what we have quantified here, which most places online, they haven't quantified what the top and bottom is, which is what's missing extensively out there. Now, then the first one, but to get the phase one in a quantitative manner, you need to quantify what the top and bottom is, which is what we have done. Now, the next part then is, once I know this is in a phase one, right? And most of our entries will be on the close of the confirmation bar, right? Which is over here. Now, after that, if I do want to trade that, then I also then start to take a look at the volatility. How much, one of the interviews we talked about it, how much of a dance will it do? How much of it will it go against you before it carries on with its phase one? Right? And that's where then I will place my initial stop loss. So let me see if I can pull this up. So I've got it all on a spreadsheet. Let me pull it to this other screen here. So I put this all together here yesterday. So if I take a look now on the MAE tables, which is how much it goes against you, then you can see for gold, right, on a daily time frame, right, we usually will look at the 98% number. So you see on a 95 or 99, you can see 1.5 ATR. This is all in ATR, by the way, right, on the daily time frame. What this means is, Tom, when I place my stop loss 1.5 ATR away from my point of entry, right? So if I go back to here, so when I place my see, we usually enter here, right? That's where all the stats is built from, on the close of the confirmation bar. So from here, if I place my stop loss 1.5 ATR away, so let's say 1.5 is about here. If I place it around there, then 98% of the time I won't get stopped out.
Correct.
Right? So by that way, I'm convinced that when this dance happens, I'm not worrying that it's going to hit my initial stop loss.
Right.
Right? So these are all just noise for me, for it to carry on further in its phase one. Now, in the event that it doesn't, at some point, then it confirms its top, right? With an orange arrow and orange dot, then that is my exit signal because the phase one move has ended according to this structure.
Okay.
Right? Remember, this is a framework. This is market structure, right? So it's not an a rigid structure or holy grail or whatever. It's just a structure. It's a framework.
Sure.
Right.
So just to further clarify to those who are new, ATR, when Thiru talks about ATR, it's average true range. And so average true range is a great measure of volatility. And in this case, 1.5 times what that average true range, it's kind of giving a cushion saying if the market trades on average, let's say gold, I don't have it in front of me, but let's say gold trades on average 50 handles. ATR of 1.5 would be 75 handles. So in order to hit your stop, it would have to be a pretty big trading day. And again, I don't have those numbers in front of me, so it might be different, but that's the thought behind it.
Spot on. That's right. Absolutely. You nailed it, right, Tom? This is one of the best things I like. I always say you're one of the best students I've got. You get it just straight away. So, so
it's
as
the
I
teacher,
say,
not the student here.
well, so coming back then, so the first step is as I said, get the phase one, and 3 simple steps to follow the smart money, I would say. Get the phase one. It's very simple. Get the phase one. Second step is then I would say get your volatility numbers right, which is your MAE, right? How much does it go against you before going towards your target? It's your second step. Now, you can do that on any time frame. We're just doing it on daily at the moment, right? You can do this on 4 hour, 1 hour, 15 minute, 5 minute, doesn't matter. You can get the MAE numbers everywhere. We've coded it, right? Now, then the final part, I would say, is where do you get out? Because that's where the money is made, right? So on an open equity basis, right? So on an open equity basis, so if you take a look over here, I got the OE tables. So if I go on to gold over here, I can take a look over here, right? So if I believe that selection of the phase one that I've done, if it's correlating on higher time frames also, I can go for the 1 ATR, which will hit it 50% of the time. Gotcha. But usually for phase ones, it will hit about 10% more, which will be about 65% of the time we'll get there, right? And then if I want to get a bigger runner, which then correlates with more time frames and supported by volume also, I can take a bigger distance, right? So now this is if you want to put a target, right, based on OE. I got some traders, and we got some strategies where we won't put a target. We call them the moon runners, right? They run to the moon. Yeah. So we won't
You're
put a target.
Speaking my language.
Right, there
like
you go.
This.
So everybody wants to catch that, but as you can see from the table, it only happens less than 5% of the time, right? So you got to set your expectations right. So you can let them keep running until you get an opposite confirmation where the phase one has ended. So that's another way of designing a strategy to capture the moon runners if you don't want to put any targets, because I know some traders like Gavin and all that who trade with the trade guider and the VSA thing, he doesn't like to put a target, right? So those kind of strategies can be constructed, and the stats can be used as a guideline. So, and to capture the moon runners, the main thing with market structure is selection, right? Which of those ones are going to be the moon runners, right? Is it going to be this blue dot, that blue dot, or is it uptrend or downtrend? And that's where all the other indicators come. And that's why we team a lot with Trade Guider, the volume principles, and all of that to see. And whenever we get a signal along, is the volume confirming? Is the higher time frame confirming? Is there any nearby resistance on the higher time frames? And all these are principles you can be applied even on 15-minute, 1 hour, 4 hour time frames and all of that. So that's what I would say in the simple thing over here that we got, and I know time is running out, in these 3 simple steps to follow the smart money, I would say, get your market structure right. Find out if it's in a phase 1. Second thing is find out your MAE. How much does it go against you before going to your target? The third thing is have an OE number, even as a guideline, if you don't want to set it as a target, whether it's going to be your 80% open equity distance or 50% or 20%, whatever it is. That's what I would say as a 3 simple steps.
Well, I like that. And the OE is how far along that move we are, right? And how much is really left, right? Oh, it's
Spot
open
on.
equity.
Because because as you know, Tom, just in a swing, right? I mean, you can never keep going in a straight line, isn't it? If the confirmation came here, of course, you got more move left from that point. But if you're going to enter here, it's going to be very less move left, isn't it?
Right. And it helps you identify if this is a trade worth even getting into.
Spot on. Absolutely. That's right.
Well, Thiru, this has been great. I know we mentioned your YouTube channel, but let's bring that up again, maybe if we can. Where else can people find you? Your website, the YouTube channel, everything else.
Yeah, I think I would say the main thing where they can find all this in detail would be 7 steps to ctp.com. So if one of the team members can put that in, that'd be great into the channel. So that's where, once they put their name, email, and number if they want, they will get 7 videos and then they can go through it in much more detail. So we go through each one of them as we spoke in the Society of Technical Analysis. Actually, one more thing I forgot to mention as well, we just got invited to also write up their training programs for automation side of systems as well. So I'll be lecturing over there too. The other thing is, I did want to mention also that, we have got the automation side of things. We'll be publishing it in NinjaTrader very soon. This is on the cable. This is just for about 6 years that we've got. Just on one strategy, 80% open equity, and that's about 14,000. That comes to about 2.5–3% per year, actually. Just on one strategy, one instrument, end of day, set and forget. But this is all based on all the principles what I've just talked about, just on phase 1s. But if you want to find out more about this, I would say the best place is 7steps2ctp.com.
Awesome. Thiru, thanks so much. Great to have you back, and we'll have you back on a couple weeks to see what we can do in the next steps.
Definitely. It was very good coming back in. Thanks, Tom.
Oh, thanks to you. And we will take a quick break. Jim will be back to wrap up with Trader Merlin. Stay tuned.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
All right, welcome back. A midday wrap up. My name's Jim Cagney and NinjaTrader Live. We're doing something special today because it is FOMC Wednesday. Joining me live, Merlin, the trader. Is it Trader Merlin? What's your website's Trader Merlin, right?
Well, yeah, website Trader Merlin, YouTube Trader Merlin. It's not my name. It's not like I'm Cher, but I figured, with Merlin, I'm kind of a unique name. So let's just call it Trader Merlin. So Merlin's not my last name. It's my first name.
I know. I know. Rothfeld is an, it's a good name. It's a good solid last name, but Trader Merlin, man, that pops.
Yeah. It got a little ring to it,
How you been?
Fantastic. It's grinding away in these markets. I'm excited for today. I think I always look forward to FOMC days. There's so much speculation and excitement about it. So it's a boring day up until that event, but once the levee breaks, it should be chaos here. So I'm looking forward to it.
It feels like this FOMC is a little different than previous ones. It's a little cloudy.
Yeah, it's definitely. I think it's not just cloudy. There's just so much over expectation from everybody. I have my idea of what I think the number is going to be today. Markets disagree. I think yesterday was a 63% chance we're getting a 50 basis point cut today. If you look at it, I don't see going 50 basis points. To me, 50 basis points is telling the market we've got a problem and we messed up. We're reacting way too late. So I think the prudent thing to do is 25 basis points. You got 2 meetings left for the rest of the year. You take it slow and see how it goes. But 50 basis points, I think, would just be a kick in the teeth for the markets. But they've priced it in. As of right now, it's 57%. We're getting a 50 basis point cut. So it's going to just be more volatility.
Yeah. So I'm in the minority with you. I also think 25 would be good. With he could be sure Powell could be dovish in his talk, right? He could say, hey, we're going to start. We're moving on this now. We're just going to take it one meeting at a time, but we're moving on this. So the messaging might be pretty important also.
It's certainly, I always look at it, tell my viewers that, look, rate announcement itself is fun. You're going to get that little pop that happens right away. And which way is it going to go? Heck if I know, man. It's going to go up, it's going to go down, it's going to move a lot. That's all I know. It's the press conference afterwards where, he gets put on the spot by all these reporters, and occasionally he'll say something that he maybe leaked a one word, like literally one damn word that just throws everybody off. Like, oh my, he said this? And then the markets go haywire, which is why I love it. But yeah, you're right. I think the scrutiny is going to be on the press conference more than the actual rate announcement. And, I've been running through all the numbers. I look at all these data points and I'm thinking, where could he point to that says we are that atrociously bad as an economy that we now need to cut 50 basis points? And there's only one area, and that's the unemployment numbers. That's it. It's not GDP. GDP's at 3%. That's not great, but it's okay. You have TIC long-term purchases, which means more people are buying U.S. goods and services than we are of theirs, at least stocks and bonds. You have unemployment claims have been dropping, which is great. You've got core PCE at 0.2%. You've got a 2.5% CPI number. These are all relatively good things that shouldn't, warrant a chaotic 50 basis point cut.
Yeah, and even the Fed's nowcast is like, the Atlanta nowcast is at 3.0. The New York Fed staff is at 2.6. these are not recessionary numbers.
No, I would argue these are growth numbers. And, GDP at 3%, I'd like to see that, but the unemployment claims, people are freaking out by 2% on the unemployment rate. It's like, well, if you go back to when we had our financial crisis and unemployment was up at 10%, Ben Bernanke was pounding the table saying, we are going to get back to full employment. Now, he was ambiguous on what full employment was, right? But he did say 5.5%. 5.5% was, according to our Fed, full employment. And we're at 0.2. So what is this? Maximum employment? In my mind, anything under, let's say, 5% unemployment is where we would want to be. So you hear these pundits on TV freaking out. I've got one of my former colleagues writing all these articles on how we have to do 50 to save our jobs market. This is just absolutely appalling. Like, we're at 4.2% back historically on a chart going back the last 50 years. 4.2 is like, yeah, baby, we're there,
Yeah, no, I know it's certainly incredible, but we'll see what happens. I mean, it's out of our hands, so to speak, and I don't think they're going to be influenced by external pressures this time. I think they're going to vote. There might be some dissent, probably, and then they're going to come up with what they think is the right thing to do.
You'll very rarely get everybody that's on that board in absolute agreement. And it's interesting to see how they're all going to position themselves down the road. But the reality is, it's going to create a tremendous amount of volatility. I mean, in my younger years, if you go back in the late 90s, sure, I would jump in front of this. I'd be positioning myself right now, anticipating a 50 basis point cut or 25, and already be full positioned right now, waiting for that announcement and, crossing my fingers that I would make out all right. As you get older and more gray hair and a receding hairline, you realize that it's about risk management. So jumping in right now and putting on a trade ahead of this announcement, to me, is stupid. I mean, because you have literally no idea where it's going to go. He could say we're keeping rates the same today, which honestly, if you look at the data, you can make the argument for it to keep those rates right where they're at. I mean, we've been in sideways for what, 9 meetings? Not 9. It's been quite a few meetings where we've kept those rates the same. I can't remember off the top of my head, but I think it's actually 9 meetings we've been stuck at 5.5. Why not? Everybody else is lowering around the world except Japan, which is ruining that whole carry trade dynamic, which is another story in itself.
Yeah, but to your point though, I mean, even if, and I agree with you, right? Everything, getting old, losing hair, risk management, don't jump in front of a number. And I would extend it to any number, because in my career, what I found, and I'm interested in your opinion here, is even when a number comes out exactly like you think it's going to, how many times does the market do the opposite that you thought was going to happen?
Yeah. 100, I'd say almost at 100%. It's never 100%, but yeah, my old mentor years ago, he would say the markets do what least people expect it, and he says, when everybody's on the bus, that's when there's no more space for people and the bus goes the opposite direction. There's all kinds of mantras that exist in this marketplace. And one of the ones I love is not necessarily a mantra, but the belief that September is this atrociously down month. Well, historically, going back to the 1950s, it's the only month in the S&P that's negative. So we hear that and instinctively you're like, oh, shoot, I better short this market for the entire month of September. Well, the reality is it's a very small percentage negative overall on an average. And in my opinion, this year, everyone I talk to, from experienced traders to neophytes who have just opened their first Robinhood account, run away, guys. Why are you doing that? Get some real tools. They're out there saying it's going to go down in September. So I'm actually bullish for the remainder of this September because everyone is bearish on it. I'm a bit of a contrarian viewpoint.
Okay. So no, I like that. But let me ask you this. Is there something to, I'll use the word seasonal analysis in some of these futures markets?
Absolutely. I think especially with futures markets, when you dive into the commodities, and this is a bit above my area of expertise. I don't usually do grains and corn, wheat, and soybeans. I'll occasionally dabble with them, but I like to do mainly indexes and metals and things like that. But yeah, seasonality plays a huge role in it. And, if you're looking at weather patterns and commitment of traders reports and all the different seasonal reports that come out, these are huge odds enhancers that if that's your area of expertise, I absolutely think you should be focusing on those. I am more of a technical person, chart person. Just show me patterns. I love patterns. I believe that they are a representation of human psychology and behavioral analysis. So if I want the best seat in the movie theater and the movie theater is packed, all I have to do is start yelling fire or gun, and the whole theater will clear out and I got the best seat. That's behavioral analysis. And if I look at, price charts right now, particularly The one I like right now is S&P 500. We're coming right back up in an overhead supply level where it sold off from before. We've got a shooting star formation right at that level. I'm looking to go short the remainder of the day if we get below certain levels. So
let's pull that chart up. I have a daily chart up on the screen right here with a bunch of lines. Ignore the lines. Those are just, these are some moving averages. But I have I use rectangles to kind of identify support and resistance. I know it's kind of like Captain Obvious, but I like to do it anyway. It helps me out.
I do the same thing, my friend. I do the same thing. Mine are yellow. I like bright yellow boxes for my old eyes.
Yeah, no, I do too. But since we got to broadcast this into the internet, I thought the blue would look a little better.
Nice. Blue is peaceful and calm. Like it.
Yeah. There you go. So anyways,
I've got mine set the same way. When you look at that candle from yesterday, today, obviously, up until this announcement, which is going to happen here shortly, you're going to get a very small compressed day. Very rarely do you get an FOMC announcement day where there's a tremendous amount of volatility before that announcement. So I'm looking at that chart right there, and that candle from yesterday, I just put a line across the bottom there, and what's that, 56.77? If I can get a crack down below that, then I'm of the belief that this thing's gonna have a nice big sell-off. And it's somewhat contrarian, right? Because we've seen higher lows for the past couple of weeks on the S&P. A lot of people thinking it's going to break to all-time highs here. Well, I'm going to play this from a short-term trade, whether that's day or swing. But that to me represents a great opportunity. And you have similar pictures on most of those indexes.
Yeah. Okay. Interesting. Yeah, that's certainly interesting. I don't know. I think there's going to be a difference, though. I think there'll be a big difference in reaction, at least for the next 24 hours, maybe 48 hours. Based on 50 versus 25.
Sure. Well, the big question is, since the odds are through Fed funds futures at CME, 50 basis point cuts what they're pricing in. So then the question becomes, if we get 50 basis points, how does the market react, right? And one would think that the markets are going to react favorably because now we've juiced that market with cheaper, easier money. So now we can buy more goods and services, which of course won't really reflect our economy for another 6 to 9 months to let that filter through. But it's that initial excitement. Then the other flip side of this, you could argue that you get 50 basis point cut today, everyone's going to go, uh-oh, we have a problem ahead. Because why are we doing 50? You only do 50 basis points or more in a panic situation, right? In a catch-up late situation. It's not a run-of-the-mill, hey, we should just lower rates to be calm. You don't do 50. You do 25, right? Or something smaller. So I think if 50 would be a shouting at the markets that the Fed has screwed up again, and we've got some problems ahead. So it's all about how people react to those numbers. Is it already priced in? And that to me is an impossible situation to read 100%.
Yeah, but that begs the question, though. Now, is the FOMC members' nice psychology when they're thinking about 25, 50, saying, hey, let's just go at 25. We don't want everybody yelling at us that we're wrong.
Yeah. And this is where you have to ask the question, are they really independent? Because I am of the belief that this rate cut is a politically motivated one, right? I think that there is pressure to cut rates to get that economy running. So as we run into this election cycle and get into November, the current administration can point and say, see, we're doing good, right? Markets are doing great, and want that little extra kick. And it's not a Democrat or Republican thing. Let's be clear. This happens in pretty much every presidential election cycle. There's that pressure to manipulate the Fed to, juice the markets and give them that little extra bump from an economic perspective. So I don't expect this time to be any different.
Yeah, I don't know. I've gone back to the dawn of time, and I've checked this very question out. It's like, is there extraordinary action taken by the FOMC? In the few meetings leading up to the election, and every 4 years, and I don't think there's a clear pattern there. I don't think I'm not 100% convinced.
You're not sold that there's a manipulation. No. Well, and let's say an extreme event. I think 50 would be an extreme announcement. I think 25 is the logical choice here that you could argue is not just political, it's also economically driven, which, 25 will probably be where we come out at.
Yeah. Well, it'll be interesting. I'd also argue that the chairman of the Federal Reserve is the worst job anybody could ever have.
Totally agree. Totally agree. Other than maybe cleaning out outhouses, yeah, I would probably. but the chairman of the Fed pays much better than an outhouse cleaner.
Well, the idea there is once you're done being chair, then that's when that's your payday.
That's the gravy train. Yeah, that's the gravy train. But Yeah, I wouldn't want that job either. You got just pressure from everybody, and it just, I don't know. You know, knowing that I have the economic lives of so many Americans in my hand would be the one that just really would make me not want to do it. I mean, obviously, I'd like to benefit and make everybody's lives better and more rewarding, but man, one little decision can really wreak havoc on a market. So,
Yeah, I miss the days when the only messaging you ever got was Fed decision imminent on
Yeah.
TV. Remember that? You get that big red Fed decision imminent. You didn't know
Loved
what
it.
they were doing.
Yeah, you know, it's funny. One of my guests, he's an old bond trader for like 40 plus years, and we talk about this a lot, where his perspective is, you know, over the years, and I think you would agree that the transparency and openness of the Fed has changed dramatically. Like I go back to my early days, and I know I'm not a Volcker guy, I'm not quite that old, but I
Yeah.
go back to the Greenspan days, and I remember when I'm on this trading floor, Greenspan would walk by with he'd cross the street with his suitcase, and
Yeah.
CNBC would zoom in on the briefcase cam. You remember the briefcase cam?
Yeah, yeah.
And it's like, oh, he's got a lot to talk about today, but you had no idea where it was going to go. You know, now they've got Fed funds futures, and it's so telegraphed. You listen to what Powell said at the Jackson Hole Symposium, and you pretty much know what's coming. You just don't know whether it's 25 or 50. So I don't know. I don't know whether I'm a fan of this overt transparency or the shock to the system of surprise. As a shorter term trader, give me the shock to the system surprise, because the volatility swings are far greater.
Yeah. Did you hear Jamie Dimon? It might have been last night. I don't know, maybe this morning, saying, yeah, there's not going to be, this is nothing burger, guys. There's not going to be any fireworks.
Well, I didn't hear that, but
Yeah.
you know, you show me an FOMC day where there isn't significant volatility swings.
Yeah.
And you know, you'll get the spike up and down right away as the announcement comes out. Then it'll calm down for a few, and then at 11, you know, I'm in Pacific time, but 11:30 when that press conference comes out, then you really start to see the bigger moves and trends. And that's kind of where I like to look at, because I'll watch that announcement, I will watch the press conference, and I will put on trades during the press conference, because typically you get that big spike of volatility, and then all of a sudden trends start to form. And that's when you get the bigger trends, which for me is what I'm interested in. I don't want the chop, I want a trend.
Okay. I was going to ask that. Would you trade during the press conference? Me personally, I'm staying away. I'll try again
I do
tomorrow.
near the tail end, not like as he starts speaking, but
Yeah.
once he gets through most of it, you know, you pretty much have heard his talk track, and we know what's going to be said. You know, it's going to be, oh, we're going to be data dependent here. We're concerned about the unemployment data. We feel comfortable with inflation numbers getting back down to our 2% target, but we're going to remain data. Come on, same garbage he said for the past 7, 8, 9 meetings. So I don't expect any surprise there. I am curious to see what he says about the unemployment numbers, because he has mentioned that in the past. And I feel there's been a shift from inflation data, which was the king of kings with regards to data points. That's now declined quite a bit now that we're back at 2.5 on CPI. And all of a sudden, unemployment numbers are being of concern, because that is a strong uptrend for the past, 9, 10 months, a year even, for unemployment.
Yeah, no, for sure. Well, let's kind of fast forward to the end of the calendar year, right? Let's say there's 75 to 100 basis point cuts, which is probably the most likely scenario. How do you think the S&P is going to react?
Well, yeah, right now they're talking about, if I look at the Fed funds futures, they're talking 5 cuts, 125 basis points by the end of the year, which I think would be, well, I mean, you think about it, you got 3 meetings left. So that would mean you have a 25 basis point cut and then 2 50s. I think that would create a bad message for our markets. But, you know, who knows? Maybe the data does start to get worse and I'm just not seeing it. I think if you start to see a lot of rate cuts, in theory, that should juice these markets higher and push us to all-time highs.
Okay. All right. Interesting. Yeah, no, I hear you. But I think there might be a little pain before that.
Sure. Again, it's the uncertainty, because it's all speculation. Do I think that the rate cut is a reflection of a bad market or a reflection of trying to stimulate the economy? And does it push up the economy before that bad data comes through? I mean, it's just this chess game that goes on. And that's the challenge we have as traders, whether you're short term, which right now I'm more of a fan of shorter term, or you're a long-term investor. You know, these are the things you just have to wade through. And that's just the nature of the beast in financial markets.
Yeah. So, in the morning, we do our shows in the morning, and we like to think about what's the bias of the market today. What's the long-term bias? What's the short-term bias of the market? And Tom Schneider's got a really good thesis on the difference between the S&P and the Russell 2000 as an example, where his thesis is, and I kind of agree with this, that the Russell 2000 ultimately will benefit much more from a series of aggressive rate hikes than the S&P.
Benefit more from aggressive rate hikes, and is that the belief that because I'm curious to see the logic behind that one. Not that I disagree with it, but it's always like, what's the thought there?
Yeah, so the thought there is that these smaller cap companies rely on borrowing more. They don't have the capex that the bigger companies do to continue growing. So they're borrowing more and they're more interest rate sensitive. So as interest rates go down, it'll benefit them more.
Okay, because my brain would say when you have rate cuts like that and money becomes cheaper, that the bigger corporations who are looking to reduce competition across the board will look out at those small cap companies and say, we're going to acquire those small cap companies, therefore giving them elevated valuations, which typically happens in bullish markets. So I think we both would agree on the trajectory of small caps versus large caps with rate cuts because of just money coming into the market, whether it's going directly to the expansion of small caps or larger companies acquiring the small ones. So yes, I would agree. I think I'd be more bullish on small caps for sure.
Okay. All right. That makes sense. Let's kind of look at another market here. We talked last time we were together, we were talking about Bitcoin. I just want to touch on it for a second if we can.
Yeah, sure.
You had me all pumped up about getting a wallet. I still want to get a wallet, but that's a whole other, we'll have that off camera.
Yeah, it's easy. It's easy to do. Look, it's one of those things that before you jump in, just be careful of which wallet you use, where you set up your accounts. But look, I mean, it's one of those things, you're witnessing the change of the whole financial system. And honestly, you look at all those futures contracts you've got listed on the right-hand side there. Every one of those futures contracts, in my opinion, within 10 years will be on a blockchain. Everything will be on a blockchain. It'll be faster, more efficient, more transparent. The fees will be cheaper. You could do so much more with blockchain than you can with traditional databases. They're just more efficient. So to me, if that's where this financial future is headed, and we're talking not just financial markets like stocks, futures, options, Forex, crypto, but real estates, titles, any asset can be digitized as an RWA, a real world asset, and put on a blockchain somewhere. And I think that that's where the financial markets are going. So I think at this point, you should have some exposure to crypto and those projects that are looking to capitalize on that financial frontier. Anyway, back to Bitcoin.
Yeah, well, I mean, and Bitcoin seems to be the big, the brand name, right? Everybody knows Bitcoin.
Yeah. Bitcoin is, if you want to know really what Bitcoin boils down to, it's about being your own bank. Really, the white paper of Bitcoin was kind of established because we had Wachovia, Washington Mutual go into receivership back in 2008, freezing customer assets and things like that, and you can't access your money. Bitcoin says, why do I need a bank to tell me what I can do with my money? It's mine. So, that's to me why I like decentralized assets in Bitcoin. But pattern-wise, you've got this chart going here. Look, it's been lower lows and lower highs. So you've got a downtrend going on for quite some time. However, there's a bigger picture here with Bitcoin that's a 4-year cycle. And that 4-year cycle started, let me bring up my charts here. That 4-year cycle started back in 2021. And when you see that 4-year cycle begin, it's going to go all the way through to 2025. The first year of that cycle, which was 2021 to 2022, you're talking an 80% decline in crypto. Then it goes sideways for about a year and a half. Then the halving happens, which just happened in April. After that, you usually get sideways to down for about 6 months, and then all of a sudden a parabolic move. The good news is, if that halving happened in April of this year, was April 19th, I believe, we are just about to start that big bull market move up. So if it doesn't happen between now and the middle of October, I don't think it's going to happen. So I think we're just about to our launch point here for crypto for the next year.
Okay.
Based off a 4-year cycle.
Okay. And why 4 years out of curiosity? That's just what the cycle's been?
I can't make rhyme or reason to it. And trust me, I've sat here with pads and papers and just written down, okay, what could have caused this? And why is it that it falls 70 to 85% in the first year of the 4-year cycle? I have no idea what causes that. I wish I did. However, I think you would agree that if you spot something that happens over and over and over again, then you just got to go, I don't know why, I'm going to take that trade, whether it doesn't matter what asset class it is. In this case, it's Bitcoin. So yeah, not only do I expect there to be a rally here, but I expect it to be monstrous. The last year of a 4-year cycle for Bitcoin is huge. I mean, we're talking thousands of percent gains. So I'm long, by the way, full disclosure, I'm long. I have quite a bit of Bitcoin and I've been holding it since 2017. So actually 2014. So I'm a long-term hodler of this one, but that 4-year cycle is something that's extremely clear, very, very clear.
Yeah, there's all sorts of patterns in life. I have no idea why they're there, but they're there. They keep going.
Yeah. I mean, you guys did a great show the other day on Fibonacci numbers, and you look at Fibonacci, you just have to shake your head and go, it doesn't make much sense why it is, but it is. The human anatomy is just a giant Fibonacci ratio. So
yeah.
Do I see it out in the financial markets? Absolutely. And I do use fib retracements occasionally. It's not my go-to tool. I'm a naked chart guy. When I was starting back in 98 as a day trader, I had so many indicators on my charts. I couldn't even see what price was. It was just so confusing because everyone said, hey, use MACD, use Bollinger's, use RSI. I have a chart that has nothing on it. I'll draw some supply demand zones, some trend lines, and that's it. And volume when I need it. I think simplest is best.
So have you evolved to this over
Yes.
time?
Oh yeah.
Okay.
I mean, Jim, you go back to 98. I was more active than probably anybody you've met. And I know you interview some pretty big heavy hitters. I was averaging 550 trades a day.
Wow. Okay.
Which is insane. I mean, it's funny because I'm averaging 550 trades a day in the late 90s. And I know for myself, I was doing okay. Spending like $10,000 in commissions in a day. The only person that was really, really happy about this was the guy that ran the trading floor. Every day he's like, welcome, Merlin, come on in. He was loving me, but you learn through trial and error, through education, you learn what works for you. And the reality is that we're all different. I know you got a bunch of viewers right now, and some of you will never make it as a day trader, but you're way better swing traders. Some people will never make it as a swing trader. You're way better position trader, but you have to find out what your niche is, what tools, what resources you like to use.
Yeah. And, that 10,000 hours, that muscle memory really is a thing, right? It's really, you could look at a chart and say, yeah, and I don't think I want to go long, guys. You have a compelling argument here, but nah, that's not right. Yeah.
And I think, the older I get, the more I realize what's important. I saw a tweet from Scottie Pippen of the Chicago Bulls, and it's interesting. He goes, the older you get, the more you realize $100,000 home versus a $10 million home still gives you the same amount of loneliness. A Ferrari versus a Ford gets you from point A to point B. And the reality, what he was trying to get at is going for the gold and trying to have all these crazy, amazing, expensive things is not really worth it. You got to value what's important to you. So, it's funny. A lot of my colleagues are driving Ferraris and Bentleys and Lamborghinis and stuff like that. I'm like, good for you. I'm happy for you. I'm a Toyota pickup guy, man. I'd rather take my money, compound it, grow it. And I do that in as risk-free of a way as I can. So I'm no longer a gunslinger like I used to be. I'll make shorter term futures trades. I always have my risk in place. I always use stop losses. And if I get stopped out, so be it. If I go back to the early trading days for me, I think one of my biggest problems was denial. And if something went against me, I would just go, no, it's going to come back. I know it. I see it. It's coming back. And I'll double down or triple down. And next thing you know, you're like, oh, I lost 20 grand today. Shoot.
Yeah. We had a good discussion with a high performance psychologist. Credo was with us, I think yesterday, and we were talking about that belief perseverance, right? I believe perseverance. I'm going to ignore the data. I'm right. Market's wrong. This is what's going to happen. And it doesn't. And you're like, wait a second, the market's wrong. Well, the market's never wrong.
Market's never wrong. Market is just it. It's like saying the ocean is wrong. The ocean is just going to do what it does. And you're just supposed to ride along with it, there's so many analogies and parallels we can draw, but, ultimately, I think if anybody here who's watching wants to be successful at whatever style of trading and whatever asset class, you really got to look at yourself first and say, what's my temperament? What do I react to? What's my behavioral analysis? And I've had to change a lot. I was, I know you got Tim and Jason over there. They may disagree with this, but I used to be extremely arrogant, cocky guy. Trading has taught me to be much more calm, grounded, and humbled in that process, because I know that when I'm not humble, the market will humble you very quickly. So, I've had to change some of my ways here, and I think that's made me a better person overall. So I think trading has certainly made me a better person.
Wow. Awesome. Well, it was great you spent time with us today. Looking forward to having you back again. And by the way, I met Scottie Pippen once.
Did you?
He was, it was in the heyday too. I was in a restaurant, and it was in the men's room. And I met him and I shook his hand, And I went out to the table, my table. I told my wife, "Hey, I just met Scottie Pippen, and it was awesome in the men's room. Shook his hand. He's cool." And my wife's like, "You shook his hand in the men's room?"
I was thinking the same thing.
And I was like, "It's Scottie Pippen." She's like, "Don't touch me."
Oh no!
Fist bump. Fist bump.
Anyway,
Nice.
awesome, man. Great intel today. Appreciate your time. Looking forward to having you back on. And Merlin, what's the best way for people to find you?
I do a daily live show as well, so they can just go to YouTube and follow me at Trader Merlin. I'm on Twitter as well, so if you want to see the kind of when I post about the different guests coming on, which I'm hoping to get you guys on the program here soon. I know you're always really busy and doing a great show for hours all day. I'm pretty sure you're like, I want to go and do another show, but we'll get you on mine one of these days. But yeah, at Trader Merlin at Twitter, or just Trader Merlin on YouTube, and I got a live daily show, and we'll be talking about bonds today, FOMC announcement with a bond expert, so it should be fun.
Awesome. Yeah, anytime. Just give me a time of holler. We'll be there. So folks, done for the morning. We're going to be back at bars closing at 3:15 this afternoon. I think Tom Schneider's going to be doing bars closing this afternoon, looking at the end of the day and what happened at the FOMC. So I appreciate everybody being here with me, being here with us. And remember, the most important message of the day, please be safe out there. Be good to each other. We'll see you soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.